sense. But yeah.
Yeah, especially in a sell the rally environment. So if you're going long at the open,
Hmm.
or even short for that matter. I mean, Friday was a good example where the sellers just sort of ran out of steam.
Yeah,
So
that's what they're saying, that the sellers are testing this 10% kind of pullback level, but they're not, there's not more sellers appearing.
yeah, there's not
So,
as much follow through or commitment. I mean, we'll see next week. I mean, especially after the run on Friday, I'm just kind of looking for balance and a balance day or two, and then just to see where we break out of balance,
mhm.
kind of give an idea of what the next move might be.
But I feel like even if we start to curl back up or break back up, it'll go up a little bit and then it's going to try to come back down to retest. Maybe not all the way down to this like 4,200 area, but I feel like we could, head back higher, maybe towards the J lines, and then pull back down to like do this retest and maybe make a lower low or
What do you mean,
a higher low. I mean,
like weekly J lines?
just like here on the daily. Like if we break
Uh,
up next week, I feel like we could maybe chop a little bit and then
okay.
it'll roll back over and then it like curls and goes. It makes a higher low. But we'll see, because I mean, there's a good chance I feel like we could even gap down on Monday
Yeah, or
and
gap
then
up.
everyone just be like, "Oh my gosh."
I mean, Sunday night open is gonna be pretty telling.
Yeah, so we'll see. Okay, guys, let's go through some trades. As you guys all know, just like interrupt or stop me, if you want to go over anything. And then, if you want to send anything over, feel free to now. I only got a few trades here so far, so send some more over, you guys. One thing I wanted to show everybody that has DAS, something really cool that they kind of recently added. It was it's a price alerts in DAS. So I mean, the price alerts is nothing new. But real quick, we'll just go over this. I wanted to show everybody because I thought it was really cool. So the price alerts window is pretty common, right? But now what they have is if you right click on your chart in DAS and go to I think chart area. Let's look. If you go to the bottom of chart area, you have this new thing called enable price alerts on chart. So now you can set price alerts on your chart. And so you flip this on, and then you have to bind it to a hotkey. So you have to, I can give you the script if you want to message me, but then you have to go to your hotkeys and see this one right here. It says create chart alert. So I just chose this hotkey and it says alert name, new alert. Alert type is going to be based on the last price. And then it adds the alert. Okay. So I bind that and then I attach that binding to my mouse button, one of my mouse buttons. So now let me pull this. Where'd that window go? So now what I want to show you guys. Sorry, my screen is giant. So it's like every time I open something, it stretches it. But what I wanted to show you is this. So now let's say like I want an alert at this 1,000 or this 200 on the daily on ES. All I do is I press my mouse button and then you see how my mouse just changed and it says, please select an alert price. And it will be based off the last price that I click. So now let's say our level that we want to watch is this breakthrough, 44.51. I just click it. And then now I have an alert there. And I just did that with my mouse, so this is a really cool kind of new way. I think maybe they've had it for a few months, but I haven't known it. And then, yeah, so like, whenever you're just watching something like Tesla, let's say, and you want to set an alert, you just click the mouse button and then you can choose, and then it sets that alert. Cool. So just message me if you want to know how to do that. But I think that that's an extremely useful tool. The only thing I don't like about it is that it makes it so the sound is on. So you have to like go in and manually turn off the sound on the alerts. But yeah, so pretty useful tool for all the DAS traders. Okay. All right, John, you want to walk us through this GE trade? I thought you said GME.
Yeah, can you hear me?
Yep, you're good.
Okay, I had to flip back to the right screen here. Yeah, so GE was setting up for a potential over under, and you really could have gotten that set up. Let me annotate. Right, you had to move up to the J lines here on this 1 minute bar. Here's our pre-market low right down here. We're below the J lines. So the blue are the 1 minute, the green are the 3 minute, the red are the 5 minute J lines. So I didn't catch this, or I didn't take the over under because it happened fairly quick, all within this 1 minute bar, and you actually had a throwback here. You would have had to risk it all the way to the top here, but so I chose not to take that. But just watched it. We came down to the pre-market low, and then it held, and it looked like this was going to keep maybe going higher. But then we got this lower high, and then this set up just perfectly here with this inside bar right at the 9 EMA.
Yeah, that was the perfect entry.
Yeah, and I the only thing I really criticize myself on this is I should have gone much bigger on this, right? 200 shares. Yeah, it's a profitable trade and it worked, but I should have been going like 1,000 shares right on this. Like there's no reason, given that A plus setup, that I shouldn't have gone full size. But I took the short there for 200. I covered a half. I took half here at 2R, and noticed, there's a couple of reasons to do that. You've got support back here. You've got the pre-market low, right? And so I'm pretty conscientious about this. When we take these curl downs, I'll take half off at that relative higher low. And then I just trailed this down, and then I just took smaller pieces, right?
Like a 10 or 20% or something.
Yeah, I think this was maybe like 25%. This was 25%. This was 25%. And then I covered all right here, and that's based on Bookmap. Just I felt like, okay, this is going to bounce. And then I took a bear flag entry right here on the 1 minute. It didn't work, and I just cut it, right? And then I was done with the trade.
Yeah.
And I was pretty happy with that. And again, my only real criticism there is I should have gone full size, because there was much more money to be made there, but it worked out. It was good.
Yeah. Yeah. Super clean trade. I love the inside bar. I mean, with 1,000 shares, you definitely got to be careful because you can see how fast this thing is moving. So, I mean, you could get squeezed 30 to 50 cents fairly quickly. So if you took 1,000 shares, I mean, you could easily get hit with a $300 to $500 loss if you weren't cutting it lightning fast.
Right.
So that's the
Right.
only thing with that. But I do agree. And then you peeled some off. You didn't get bumped out at break even here, or did you not move to break even?
I did not move to break even. I didn't have a stop in. I was just ready to cut it with my hotkeys, but I was trailing 9 EMA. And
Okay.
that's an area of improvement for me where I've been moving my stop to break even too quickly. And I end up getting stopped out on that last piece, and then it keeps going. Right. So
Yeah.
I've really decided, like, okay, you got to give it more room. You got to trail 9 EMA. But I've been wicked out at my break-even price so many times. It's like, all right, I've got to stop that because it's taking me out of good trades.
Yeah. I agree that that happens quite a bit. Sometimes you get into market situations where you can move to break even quickly. Not in this type of market right now where everything's hesitating and before it breaks out, it kind of retests things. So
Right.
yeah, in
I
this type
went
of
to
situation, it's good to not move to break even too quickly.
I went to break even on when this bar closed right here.
Which, okay, this bar.
Yeah, when we closed there on that 1 minute bar, that's when I set my stop break even.
Okay.
Because notice,
Yeah, tested and rejected it.
yeah, and then I knew that okay, if we bounce from right here, like this trade's going to be wrong, right? So I want to be out break even. Like we got this move down, and then we got this move down. It keeps. Let me clear those. I just my thought process was okay. We're right here. If this holds, I want to be out break even. Right? If this happens, I want to be out break even. And that was pretty close to the 9 EMA as well, right? Holding, and then I just trailed 9 EMA all the way down.
That was perfect. That was the perfect trailing method. Yeah, and then this is the right thing to do with this re-add and just get back out if it stops working. Lately, we get these like bear flag setups kind of like this, and then all of a sudden, instead of it breaking down further, it just goes sideways.
Right. Yeah. Yeah. So that was GE.
Nice. That was a
John, was
great
that
trade.
was this new trade or was that a recycle?
Down here on the bottom right.
Yeah, this one.
I was actually, I guess you could call it a new trade because I was actually flat right here. And then I put on, and I think I went 100 shares right there. So I went even half of my original size.
That makes sense. I was thinking like what, if you had like entry at the top, and then if it's just recycle, you could have like held break even. But if it's a new trade, it makes sense. Yeah.
Yep. Yeah. So that's how I did it.
And you hear how on this trade, he did smaller size. And I think that's such a great approach because you're really extended down here. You're getting further from the J lines. You're not up here where the J lines were still pretty close. You're getting farther away. I mean, it is right at the 9, which is a good place to take the trade. But it's really easy if you took another 200-300 shares. Let's say you're overconfident after this trade to just give back a big chunk quickly. So that was perfect management.
And GE had earnings, so it was in play with its earnings announcement, if I recall correctly.
Perfect. Yeah, that's good. Yeah, we had some interesting earnings this past week. I mean, some things had good earnings and it just was not your normal reaction because of where we're at in the market. I mean, when it's like just the bull run day after day, you can kind of expect a lot more. But right now, you got to be a little bit more cautious with just trading overall.
Yep. Yep. I have a question for the group really quick. I use the Razer hotkeys along with DAS, and DAS I've noticed every once in a while, and this bit me yesterday. I haven't been able to figure out why this is happening sometimes, but I hit my hotkey to do a buy on Boeing, and what ended up, instead of DAS routing the order, it put the letter A in the what
The
field
montage.
was it? Yeah, it put it in the symbol field of the montage. So my buy key that I was using is set to Control A, is how it's mapped on Razer.
Uh-huh.
And then I hit that key, and what happened was it put the letter A in the symbol field on the montage, and it did not send the order. And I had to close the platform and reopen it twice, because I reopened it the first time and it was still doing it. I did a test order. I just did one share on something away from the market, but it did it again. Has anyone else had that behavior from
I have a
DAS?
suggestion. Why don't you change what the command is, because it might be interfering with something else your computer uses Control A for. So maybe change it to control Z or control something else, or shift A.
Yeah, maybe I agree with Leslie. Try to change the hotkey to like control 1 or something, and maybe it won't fill out this letter field up here. But I haven't had that problem
Okay.
really. And
I've
you'll click.
had different problems, guys, with it. Like, and I tell you what, I think I mentioned this a couple of weeks ago. It happened, and then it happened once, and it never happened again. So what's happening is, let's use Tesla because that's on Eric's screen. So let's say I'm in the trade, and I try to get out at 8:52, and for some reason I don't get filled. Well, I'll cancel the order, and then try to get out again. So I'll hit let's say I'm long. I'll just hit sell ask or sell bid. I don't get filled. But what I noticed was
Yeah.
happening is it's the montage isn't following price. And it was so you would hit it, and whatever I had hit last time, whatever price I had hit, it was staying at that price. So it wasn't following price as it fluctuated.
Yeah,
That happened to me 3 times this week. So it
You gotta,
happened a
like-
couple weeks ago, and then it didn't happen. It happened again. I don't know.
you got to go right here and then like take the price out. So it'll say like 852 here, and then now it's at a different price. So you got to actually like go and like clear this out,
Yeah.
or it'll be there on your trigger too. Like
Yeah.
it'll be like kind of here too, maybe like something like that. It'll have some, it'll be like that. And then so you got to actually go and clear it or change the route type. But what I have on my hotkeys is to cancel all orders prior. I think you should probably have that, but that usually does it
do.
for me.
So like if let's say I'm in a trade and it starts moving against me really fast, I don't have hard stops, which I probably should start using. But and I try to get out and I miss, and because it's moving so fast, I'll cancel the trade right away. So that should clear it right there. And then when I hit exit again, I should be at the current price. And so like, I mean, when you're in a trade and price is moving so rapidly, especially at the open, last thing I want to be doing is going down clearing that field in the
Mhm.
montage.
So are you using, when you're partialing, are you using a hotkey, or you're trying to just press like
everything's hotkeys for me. It was with DAS. So what I did after 3 days of that shit, I use interactive brokers. So after the 3rd day, I set it up on Wednesday night. I set up PWS for interactive brokers, and then I traded Thursday and Friday with interactive brokers, and it was pretty cool.
yeah,
was good.
that's cool.
Their
Yeah.
hotkeys aren't as like, you can't get hotkeys as detailed as you can with DAS. So I'm still working on that. Like you can't sell, like for example, a portion of your position. I haven't figured it out yet. We spent a few hours with interactive brokers on the phone, talked to 4 different people, couldn't get any help on it. So that's what sucks with it. Just figuring it out. I just thought I'd throw it in there. Just
You know,
Hey,
throwing it
Tom.
in there.
One
Tom,
of
you
the
can
things-
actually set up several hotkeys to do I worked on that too, and on IB. And what I had to do was just set up some different hotkeys on a different page of my Stream Deck. Buy or
Okay.
sell 2, 3, or 5, but you cannot get a 50%, like say sell half, partial out by half. I could never get a 50% to work. So I just had to have several different hotkeys that would say sell 2 or buy 2 or buy 5 or sell 5.
That's
Okay,
what I,
well,
yeah.
why don't we chat about that a little later, Les, so we don't keep everybody, and I'll pick your brain on that.
Yeah, absolutely.
Also, guys, if you want, I'll send over my hotkeys for you guys to try. But one of the things I was gonna say, Patron, was when you're partialing, sometimes if the plus or the spread, because like this is like a route limit order, and so it kind of, I'm adding like a 10-cent spread on it, so that way I can get filled. Because sometimes with Tesla, like when the spread's so high, it's moving so fast. If this was like a 5 or less, like that, whoops, actually like that, it might place a limit order on the screen, and then it will just keep moving past it and not get me filled. And then I
Yeah,
try it again,
yeah.
and then it just places a new limit order, and then it doesn't fill me. So sometimes if you up that spread, that helps. But just message me, and I can probably help you fix the hotkeys. because I've dealt with all that. I mean, so it happens.
Cool, thanks, Eric, appreciate it.
Yeah, Eric, one question. So normally you just click on the chart and enter the hard key, right?
Yeah.
Yeah, so I have noticed one another thing. So I just started just looking on the montage. I mean, of course, I have an eye on the chart. And what I do is I look on the montage and I just keep on the best bid price and just click on the best bid price. I mean, there are some spreads are there. I just click on the best bid price and hit the hotkey. And then that gives me sometimes better
Oh,
price.
cool. Yeah. So that Patron, that's kind of a solution potentially for you.
Yeah.
Is like, let's say you're trying to get filled on the bid, right?
Correct, correct.
So what Remen is saying is just like click on the price here and it will adjust your price here
Yes,
on your montage.
that's right.
And then you might have an easier time getting filled.
Nice, good to know. Thanks, guys, thanks.
Yeah. Yeah. I forgot that you could click on, I never click on these, but yeah, you can, and it will change your price to whatever it is you click on. And then, yeah. And John, what was your hotkey issue before?
It instead of sending the order, it put the letter A in the ticker
Oh,
symbol field.
yeah. That I'm not sure of. That sounded like a kind of like an update thing. You're running the latest update, right?
Yeah, I'm running the latest, and that's not the first time that's happened.
Mhm.
But yeah, DAS kind of irritated me this week with being behind
Yeah,
the market.
everybody.
Yeah, not okay. And then of course now hotkeys not acting well. It's like, guys, freaking get on top of it.
Yeah, sometimes I feel like when the market's just selling off like crazy, they like, it's not really, I'm sure, intentional, but I feel like they let the programs not work that well because then you can't sell, you can't do anything. So that way it hopefully slows down the volatility of all the retailers trying to, you know, trade or do something on a crazy day.
I hope that's not the case, because that's a pretty chicken shit way to serve your customer base.
I hope that's not the case either. But yeah, this week, usually DAS messes up for one day, but I've never seen it mess up like multiple days in a row. And yeah, so what I did every day today, this week, was I put like a 1 or 10 share test order first to make sure,
Yeah,
it's
that's what I'll
working.
do. Yeah, that's what I'll do in the mornings as well, is do test orders
Because
before
on,
market.
I think it was like Tuesday, I did a test order on Microsoft. I couldn't sell out of the position, and I actually had to go and contact IB and message them, and I had to go sell the position in IB, and then I had to go message DAS. So like, I mean, if I took that position on full size, I would have got rocked. So
It was a weird week.
yeah,
NASDAQ NQ locked up a couple of times. And it wasn't just me on toss. It was multiple traders I checked with. Their NASDAQ was locked up also, but the rest of the market was flying on the charts. It was just really weird.
Yeah, I noticed Bookmap was behind. What symbol was I looking at? I don't remember now, but I noticed Bookmap was actually a few seconds behind for a while yesterday. And I'm wondering if there isn't a deeper infrastructure problem with something
Well,
going on in the internet backbone in the Northeast or
they
something.
said that the actual NASDAQ like had a problem with, I think it was like power or something, but they lost like all the data feed. And then I got a message on DAS or whatever, and they were saying that like part of the data on the chart was like missing and not going to be replaced for like some pre-market time or after hours time. So I mean, they had something really messed up. I think
Yeah,
they said it was like a blackout or something like that. But
yikes.
so
I
yeah,
got a
pretty
question,
interesting.
guys. It's Leo. Good morning.
Hey, Leo.
Hey,
How was the
question.
week?
Are you guys using Rhythmic with DOS? Rhythmic feed?
Direct.
Direct.
Yeah, I'm using direct, I believe.
Yeah,
Okay.
Rhythmic is for the futures, I believe.
Yeah, it is. Okay.
Yeah,
Because I'm using Motive Wave And I'm getting it's not bad. It's actually pretty nice. So I'll hook up the motive wave to rhythmic, and I can trade my edge to trade account and trade station, as well as TD Ameritrade as well through one program.
Hmm.
And it's pretty nice. The charts are nice. I use the keypad for hotkeys. They work really well. So I don't know if that's something you guys would want to look into or not, if it might help you or not.
It's called Mode.
Motive,
Motive.
MOTIVE, wave.
Motive Wave. Okay. I'll have to research it.
Yeah.
It's got a nice layout. The charts look good. They got lots of indicators. I was even able to, I think I made some J lines waves on there. So yeah, it works. I like
Cool.
it.
Thanks for sharing.
Mhm.
Okay, guys, John, let's pull up your not so good trade, I guess. Let's discuss that.
Yeah, this was the really poor trade of the week. And I made a lot of mistakes with this, starting with I followed Jay on his first buy on Microsoft.
Oh, yeah, yeah. I bought this, I did the same thing, and this is where I was saying I couldn't sell the position. So luckily you were
Oh.
able to trade.
Yeah.
I like sold it down here and bought it up here. I think right here.
Yeah. And this is a cardinal mistake of mine is, excuse me. Jay, if you guys, I don't know if you guys remember in the room, but he bought Microsoft based on NASDAQ was moving up. And that is just not how I trade. And he even says, he's like, don't follow me, don't follow call outs in the room. Well, that's what I did. And I took that first loss. And that was about $150 loss. And then I was just pissed with myself about it. And I completely over traded trying to get Microsoft back to flat on the day. Right. Cause I was just like, damn it. I just put myself in a hole. And, I took, I was ahead of, trying to get in front of this bear flag. And, I took a couple of cuts, right? And I was actually able to re-enter this, and I was able to cover half down here. And then there's another where I, shorted, cut, and then I was able to get this back on, and I was able to get half and then, break even. But down here, right, this is just shorting weakness, right? So just a lot of over trading. There were a couple of good entries here, but I was just had that mindset of I'm going to get this back to green on the day. That first trade just screwed me. Damn it, I followed J Trader and I'm not supposed to. Just all of those thoughts going through my head. And as you can see, just nothing good happened. Right.
Yeah, you got to be careful with the opening trades, because especially in this market, like right now I'm sizing them down because the accuracy of like a continuation move is just so much lower,
Right.
As you can
One,
see,
had I followed my game plan,
Mhm.
this would have never happened. Then I would have been just waiting and saying, okay, failed follow through. Great. I'm going to take that trade or take this trade on a failed follow through, covered it. And then once we had this, probably would have been done with it for the day.
Yeah, I'm
Right.
surprised you didn't take a trade here or here.
Yeah, I am too. Right. Missed those. But this is just trading done badly, guys. And
So just another thought is, like, if you are going to follow Jay, which, I would say he's pretty accurate on a lot of the things he's calling out. I mean,
well, he's calling them out, but you're not going to get the same prices, right? So
yeah, so that's
he's
where
already hit his hotkey before he says long, whatever.
Mhm.
And so I have a rule like, look, I'm not going to follow that call out because I'm not getting the same price.
Or if you
I'm
do,
going to be behind.
just risk like $50 on it instead of 150 or 100 or more.
Yeah.
because you
So,
wouldn't feel as bad if you were down $50 instead of 150.
yeah. Well, and I was
And
just angry with myself that I broke my rule. And then, I could argue I was kind of trading on tilt through this whole mess, right?
mhm, mhm.
So good example
Yeah,
of, and then this, look how lateral this is. What the hell am I doing in here? Right?
yeah,
There are no real trades in there, but I took a bunch of them. So that's a trade done badly from this week.
it happens. So yeah, I mean, trading here, you kind of had this like almost this higher time frame kind of J line resistance, the 3 minutes. It was working as a support here, and then now it's working as a resistance here, especially right here. This would have been a decent short here too, where they're crossing. But a couple of thoughts for you. So you didn't get the J line. You cut it here, and it never. I mean, it popped up above it, but it closed below. So when you start to see these topping wicks, it kind of for me is a signal to widen the stop loss a little bit and let these like fake pops happen, because if you were shorting into these pops here, you would have gotten a nice fade down. And if you would have actually held these trades, obviously it's hard to do when it's going through your stop loss, but when the market and the VIX is up to $30 or so, it's a good time to widen the stop loss, because you still would have gotten to 2R down here if you had your stop loss up here. And, you would have gotten 2R down here, or you could have like re-added to the trades and then gotten to more R's,
Yep.
So just a thought for you. And then another thing, I just want to show you on my chart. So this is on 126 Microsoft, right? Okay, what I wanted to just show you real fast was this on Microsoft, because I was trading the same thing, but I was watching it and I was seeing these lines are just these topping wicks. Okay, so here's Microsoft on 126 when you traded it. It faded down here, did that J line rejection, and then we've got the 9 moving average here, which it's kind of not respecting the 9 too well. I mean, you could say that every time it got to the 9, it kind of rejected it here, but it was going through it and then having to sell off. So what I did this week was, instead of using the 9 moving average because the VIX is so elevated, I switched it to the 20. Actually, let me add another moving average, because I showed you guys this last time. Okay, look how much better this blue line is. Look how much better it's being respected, the 20 compared to the 9. The 9, it's popping through it. And if you're trailing using the 9, or you're using the 9 as a stop loss point, it's not going to work as well. So a lot of times this week on a lot of different stocks, just the average true range is higher on all these things. So the 20 was working so much more respected, I would say. Obviously it went through here and here, but yeah, so this is just one kind of small example, but throughout the week, the 20 was, working a lot better. You can see here the 9's not being respected, but then it gets to the 20 and it's actually kind of holding it a little bit better. So just a thought for you. Sometimes when you see it, going through, fading down, going through, fading down like this, flip it to a 20 moving average, and that can kind of change your mindset a little bit on when to take the trade and when to wait for that perfect setup.
Yeah, it makes a lot of sense. Jay Trader's feedback to me on this trade was, you know, when you've got a failed follow through right out of the gate, right, you know, really close to the open,
Mm-hmm.
sell these wicks, right?
Okay.
That's
Yeah.
what he had pointed out to me. He's like, sell the J lines. Because I was looking to trade this more on a flag, right?
Yeah.
And what he pointed out, he's like, in this particular setup with the failed follow through, you know, you're kind of trading it almost more like a small cap in the sense that where you're selling those pops,
Yeah.
because we don't usually sell pops on the big caps, right?
Correct.
But in this specialized situation, that's where that was his feedback to me on this trades, that you know, it was, and he had done those, he had sold those pops because he shared his chart with me, and his executions were all up here. You know, his shorts were up there, and then he was covering down here on these washes. So that was his feedback to me on that trade. But so good learning opportunity for me. And like I said, an example of a really frustrating trade that didn't go well for me.
But also, so I mean, I agree with that. The fail follow throughs on big caps have been working so
Yeah.
much more. So we
Well,
went
sure.
through like a period of like 2 months where like there was barely any fail follow throughs, which is like a rejection of pre-market high. And right now you're getting so many of them.
Which makes perfect sense because rallies are getting sold. We've got very bearish market action in the broader market. It makes
Yeah.
perfect sense that failed follow throughs would be getting more of them. And actually, I'm doing the homework, and I'm looking for how many over unders did we get in the last week, because we should be getting more over unders as well in this bearish market environment.
Yeah, but the problem with the over unders, I would say, I mean, we probably are getting more. I don't really trade over unders, just the under overs, as you know. But the problem with this market is it's so choppy that, like, this is a good example. This would have worked great, and you would have been able to hold it. But often we're seeing this like chop sideways in this opening range for 3 to 5 minutes, and then you maybe get the breakdown. So it's kind of like a 5-minute over under is probably a little bit better. But
I'd even say, Eric, I'd like to even add to that prices, often we saw price take off in the morning, and then it take like 30 minutes for it to turn over. You know, so you're getting a longer, it's like a real, like really drawing people into the long side, hoping for a bounce or that we're going to turn around here, because everybody's kind of expecting us to go back up. But it's just like when we were trending, it was the same thing. We'd sell off kind of like this chart that we're looking at, but then it would put in like a double bottom and then turn around and go up. And it would take, you know, a half hour, 45 minutes, 10:30. Well, a few of the moves, the bigger moves that I've caught are happening later in the morning, like after 10 o'clock, some at 10:30. I would say in between 10 and 10:30. So like this one here, I haven't seen too much price action like this from what I've been watching, where it just kind of pops up. There's been a few where it pops up and gives you like a real straightforward failed follow through. But yeah, they're really trying to draw you into the long side, and then they're dumping. Like Thursday was perfect for that, and it took a while. Sometimes it's even later in the afternoon. Like yesterday, we popped up. I think we popped down yesterday and then popped up, stayed up there for a bit, and then it sold off, trapped everybody, and then blew up and closed high, right?
Mm-hmm.
Yeah, I just wanted to throw that in there. And another thing, I want to add to what Eric was saying about these wicks here, because I've been applying it to my trading, and it's really helped my average on my trades. So like when you see price kind of consolidate in a range, I'm usually taking the breakout on a 9 EMA tap, or the breakdown in this case. So what I've been doing is taking a feeler as it kind of goes over, under, and wicks above whatever. It might be the 9, or it might be the 20, or even the J lines. When it wicks over and comes back under, I'll enter a feeler there, kind of like they do with small caps in our room. And then when price breaks the trend line to the lower side, I'll add. So let's say I want like a 2 contract position, because I'm usually trading contracts, right? I'll just enter half my position or a quarter of my position on that over under. And then when price breaks, I add. If it turns against me, my stop is my original entry now. So I have a better average with the same risk after I've entered.
Yeah, that's great.
And
Building
it's really
positions right now.
like, I was blown away today because I kind of, I went on a tear where I wasn't really trading the 9 EMA, right? So that's what made me kind of change it up. Kind of looked back at my trades and said, okay, well, what if I enter here? And I'll try it out with small size and see how it works. I was trading like a 40% win rate on it. And I was blown away this week. I took significantly less trades on it. I was more paid. I was trying to take them from the 3-minute chart or the 5 instead of the 1. But I ended up with a 72% average on that trade this week, just applying this.
Nice.
It gives you
Yeah.
it gives you a much better risk reward to start with. And it also, because often when it breaks, especially on the 1 minute, it just turns around. And then, you know, it takes you 3-4 tries to realize you're just trading chop. You get what I'm
Yeah.
saying, guys?
Definitely.
So what Eric's saying, and I think I might even saw in one of Eric's trades in one of these sessions where he does enter like that. I said, you know what, I'm trying to apply it and see how it works. And it does, it freaking works. So
Yeah,
I'm applying it to, I did it on a JR too. So instead of waiting for this to break, I get in on the under over. You can see the topping tail come in, and then you know, there's a likely scenario where you're going to get a liquidity grab above that area where they take out some stops, and then you see the flush, and it's all in the momentum of that candle. You can just see it reject right away. So you enter, and then once you break the trend line and you know that you have confirmation, it gives you conviction to add more. And then if it comes back against you, you're not at your original stop, you're at your original entry. So that way whatever you've added is what you're risking now, right? And what your first add is risk-free. Am I making any sense?
Definitely.
Mhm.
Yeah. It's a great way to approach it. I think that that's the best way to kind of trade in this market currently, because you're not getting shaken out so fast. You're able to hold with this wider stop because you're just starting with a feeler, and you can build positions a little bit better. I think that to add to that is if you're watching also the 5-minute and you're trying to catch a 5-minute breakout as well, so that you start with a feeler and then now you're trying to catch the breakout on the 5-minute and you're adding full size with that. That's how you can start to get good returns, and then making it, you know, letting it work. So just a couple of thoughts to add, but I agree. And then the last thing with this one, and we'll keep moving, you guys, that for John and for everybody, is how many trades are you allowed to take when you're fighting and over trading, you know? And that's what you need to just ask yourself. You know, Jay's rule is if he stops out 3 times, he can't trade that anymore.
That's my rule too. I've even added to it where it's 2 times I have to take a 10-minute break on the stop.
There you
Because what'll happen with me mentally, I'll take 2 stops and maybe one gets away from me and it ends up being bigger than I expected. That's when the revenge trade starts kicking in and Tom turns into John Rambo. So I have to have that rule. And when I follow it, it usually works out great, because if you give yourself time to breathe and give yourself that break, you kind of, you sit back and look at the bigger picture, and you might see something else in the pattern, right? That might change your bias, or you might look for a better spot to enter, right? Instead of, because you get, for me, I get FOMO kicks in real quick. If I've missed a move and I think it's going to happen, and then I miss it again, and then I get a bigger stop, and now I've lost more than I expected. Then I start to revenge trade, hoping I don't miss the move, right?
Yeah. And that's
Did you notice that? Did you notice less of that FOMO feeling when you traded the higher time frames, the 3 and the 5-minute?
Yes.
Okay, so there's something to consider, right? When you're seeing, I mean, because we eat with our eyes first.
Yeah.
Right, and we're already traders. Our caveman mentality is that we got to get in the trade. We got to get in the trade, right? It's not until you've been trading for a long time and figured out, okay, this isn't about taking trades, it's about making money, that you start realizing, you know what? I don't need to take a trade. I can sit on my hands for 5 days, and then on the 6th day, hit a monster trade that covers, you know, a month's worth of P&L or more so. So the same thing. Try not to think about the fact that you're FOMOing all the time and make it an emotional hijack scenario or a mental issue. Think about the fact that what you're looking at might also be causing you to think, I guess, on a faster pace, or react better set on a faster pace, which is the tape sprinting, the 1 minute chart popping up and down, giving us that subconscious feeling of I've got to keep up with the pace of this, right? Like if you're running a race and you see, you see the leader is 2 miles ahead and you can see him, well, and you want to win, you're going to pick up your pace to catch up with him. Or if the pack at a race is ahead of you and you want to keep up with them. But then you see, watch these videos of these world-class racers, sprinters, where, like a 400 meter or the higher races, where you'll see the guy that's just lingering in the back or in the middle of the pack, keeping his pace, doing his thing. And then what does he do on the last 2 laps?
Bolts.
Starts picking it up. And this guy was in the back or in the middle of the pack, unnoticed. And then at the finish line, what happens? He's in the front.
He wins. Yep. No, I appreciate that, OTC. I get what you're saying, and it makes total sense, and it's something that I've been working on, and going to the higher time frame has helped me, and I'm trying to pay more attention to it. I'll open I focus on the 1 minute at the open for the first 15 minutes, and then I turn to the 3 minute, and I have 2 charts for each asset I'm following. So if I'm watching Apple or whatever, I've got a 3 minute up, and I'll on the right side, I'll go back and forth from a 5 minute to a 10 minute, because I just want to see the bigger trend. I want to see where the levels are. It gives me a clearer picture, it slows my mind down a bit. But yeah, it's, and that's something I've been working on and I say to myself every morning, listen, man, you don't have to trade. You really don't have. You have to be okay with missing a trade, because there's going to be one within minutes somewhere else. Whether it be on that asset or another stock you're watching, you don't have to get into every trade. So no, I appreciate what you're saying. I understand what you're saying.
Yeah. And just to add to what kind of OTC is saying, is like when you start trading like this, if you look at the 5 minute, you'll realize that there's no setup on the 5 minute. You'll think that like this thing's about to break down and you're shorting into it and you're seeing the flag set up, but then you like look at a 5 minute and you're like, wait a second, there's nothing here.
Well, you'll also notice in this scenario that the moving averages are like way above it on the 5 minute, that it's extended and it needs time to consolidate and for the moving averages to catch up. It's another thing you'll notice too, right?
Yeah.
So you think you're bouncing off this 9 here. I think the dashed line on John's chart is the 9, right? But you think, okay, it's really looking like it's pushing down, like you said, Eric. But if you look at the 5, the 9's nowhere near it. And which chart's more significant? The higher time frame always, right?
Yeah. So what I'm trying to look for is like, when are we making a new 5 minute low? And then I'll try to apply that with whatever trade I can get going. But so that's important, you guys, especially in this market more than ever, I would say, because it's not just easy breakouts right now. And the other thing is how many trades do you allow yourself to take if this situation arises? I used to overtrade just like this. And then I would look, I would get to this point in the day where I'd be like so far in the red that I'm like, I can't even dig myself out of this hole now. Like, this is bad. The momentum slowing down. Like, I'm not going to be able to get back out of this one. And then I just kind of stop there because I feel like I can't make it back. But when you're trading here, you feel like, oh, I can make it back. So, think to yourself, think about how your trading style is, and then apply that. For me, I'm only allowed to take 7 trades in a day. If I've just found that, and I used to trade just exactly like this. And if I take more than 7 trades in a day, that means I'm not holding. That means I'm cutting them too fast. I'm kind of scalping too much, and it's just not ideal. Cool.
Yep.
Yeah, I agree. Trading
Thank you.
futures, you can easily overtrade. I don't take more than 6, 8 trades at maximum. And then if I do have more than that and I'm still okay, I'll make a note my mistake for the day was over traded, even though it turned
Yeah.
out okay.
Same. Yeah, if I took more than 7 trades, and then my mistake that day was like I took more than 7 trades. So it's
Yeah,
just
I know, and I note that on my trader sync.
and I usually do it when I take a short like this, and maybe I cut it, or maybe I got out at break even, and then I missed the leg down because it needed more time to work. And that kind of leads me to like, oh, well, let me take another trade because I just missed that last one. Where if, John, you would have held this, let's say, had a wider stop and it would have worked, you might have not taken any of these other trades.
Oh, for
So
sure. Yeah,
so
for
that's
sure.
where
I
you got to
wouldn't have-
realize that is like,
Yeah.
okay, if that trade would have worked, I probably wouldn't be here over trading right now. Whereas it didn't work, I'm cutting them too fast, so I try again, and then I cut it too fast, and I try again, and then it cut, and that's how like that scalping over trading happens. So I've just realized that once I start doing that, I got to stop because I'm not going to let the trade work. As soon as I get into a position and it runs against me a little bit, I have that feeling I need to cut it. So, yeah, I mean,
Yep,
that's
for sure.
just, that's the bad part about scalping, unfortunately.
Yep.
You never give sometimes positions enough time to work. So,
Eric, I'm gonna step away for just a moment.
yeah, you're good. Okay, let's move on. OTC, since we just had you here, did you want to go through your chart? Let's see if we still got him.
Yeah, I can do that.
Okay, cool. Yeah.
So rather than sharing, a good trade, I think there's more value in sharing a poor trade. So
Cool.
just to identify what's going on here. So the 30-minute back here is how I set these trend lines, right? And I set the lower trend line based on this point and this point. And then this point hit, right? So confirms that the trend line's working. This trend line here is just a duplicate parallel, right? So there's not, I set the duplicate parallel as a range and it hits here. And then it ultimately hits here, right? So the thesis was solid based on a higher time frame. My thesis was to, after seeing this reclaim here in the pre-market, the thesis was if this thing comes down to here and here, get in, right? So put my first entry here and then go full size here, risking the bottom of this wick right here. But I didn't do that.
Did you over add?
I was trading. No, these were all EOs, feeler orders. Very small size relative to the price point. But just what it was is that since I did not follow my thesis, have the discipline to enter where I wanted to enter, when it got to this point, I loaded the boat because I expected a bounce off of this previous candle, right? This candle right here.
Mm-hmm.
And got out here unscathed, right? No loss. And then I kept a little bit on and then realized, okay, I'm not trading my A game here. I'm not following my thesis. And INDO halted, which is my bread and butter setup. So I set a hard stop and then turned away and traded INDO. So I in a sense, I gave up on this trade for a better suited opportunity.
Okay.
Right. But the correct way to trade it, which I'm going to be working on this week, is just set a limit order here, set a limit order here. And then once those limit orders hit, then start paying attention to the ticker. So I've modified my trading platform to give me a notification box when an order is filled on a limit order. And so, and it also beeps, it makes a funny sound. So I could be doing, I could be looking at a number of other charts, and then that notification will pop up and I'll see, oh, I got an order fill on Apple. Change over to it. I call them EOs, engagement orders, right? They engage me onto the tape. So yeah, the point is that if I would have followed my thesis and avoided this, and this ad here was really just to get out unscathed on that trend line, I wouldn't have had this. It was a insignificant loss, but I mean, the point is that if I follow my thesis, right, here's my first target. That's, I enter, let's say I get, loaded the boat here with, what is that? Let's just say it's 162.75. And I put my stop loss here at 162. That's 75-cent risk, right? So that's 1R, 2R, 3R, or 3R here, 4R. And I would not taken anything off until high day break. After this sell-off, you've got the classic W pattern here. So it's going for the pre-market. So a lot of reward left on the table because I didn't have the discipline to adhere to my thesis, is the moral of the story.
One thing I'll add, because I was trading Apple yesterday also, was that we had a VPA level at 163 and it was holding there. So, I mean, it looked like it was going to break, but we had a pretty good level at 163 and it just ended up holding. And then obviously, yeah, this thing ran. So I know you usually use those levels. So I don't know, just some thought or something to go look back at. Because I feel like that could have helped.
I could draw it off of this, right?
Yeah,
I don't know. That probably correlates.
Yeah, kinda like
that's a support. That's a support here, which is shown here, support, and then it held here with the undershoot.
yeah. Yeah, so
Here it was a resistance, and then here, I mean, couldn't get a clear case of them saying, okay, that's not going to be a resistance anymore. I think this was earnings, right? Yeah.
Yep.
That's the other thing you can read in my notes that I'm like, I know in the back of my mind instinctively that they're going to sell this off first because this ticker is going to be overcrowded. Everyone's wanting to play the good earnings report on Apple. So I was part of the trap.
It happens, right? Okay, let's see here. I just wanted to pull up this one level just for you to take another look, because that 163 ended up being so significant. Because it was the hold of the day. Let's see here. So like, right, just looking at, we've got right here, volume by price. There's VPOC. And then we've got a pretty good size level right here, but let's back it up a little bit and see how that level worked prior. See how VPOC is right here in pre-market, this bottom. So, 163.10, call it 163. It's a big cap, so call it 162.75 is your area. 75 up to 25, right? So you got this touch here, you got that touch there, and we can flip this to a 5-minute. So it's more how you would do it. So yeah, so that was the level to kind of play off of here. If I'm just cruising on on the 5 minute, look at 163 and 50. Looks like it wasn't there at 163 at that time, but you got a lot of, volume by price action at this area. And then as we cruise, oh, whoops, went a little too far, but yeah. So that was kind of this level that I was playing off of here. So I think that just a thought is using that some of those levels are very significant at this time, because this is how I was looking at it in pre-market before the open. And then I'll put I'll zoom out like that. I'll put a level here and be like, all right, if we lose this and we get down here, this is kind of like, this is a range here. If it's going to lose this 163, maybe it's going to hold up here at 162. And then if we get back above 163, we're looking to take this thing long, at least up to 165. 167, I think, had a lot of resistance as well. But just a thought. And then if we're losing this 161, I mean, just stay away from it, because there's a good chance it could head down towards this 160 area. So
Yeah, that's a good read on it. Yeah.
Yeah, so just a thought, like you can see here, this 160 level, normally it's the whole dollar that's going to hold it up, but it was 159. And they've been kind of doing this lately on some of the big caps. Instead of it holding up completely at 160, they let it go through, and then they get this weird 159 levels where they decide to hold it, or 158 and 50. And then they bring it back up. So most people are playing off this 160 level, let's say, but then they hold it up at 158 and 50. So yeah, just a couple little thoughts there. But lately, every morning OTC, I've been marking my levels, obviously on the bigger time frames, and then down to a 60-minute, I'd look for something, and then I pull up the 5 and I mark my VPA levels, because right now I feel in the market, the VPA levels are what's working the best, because there's so much indecision in the market. We don't know if we're going up or down. So people are really trusting the value zones of where we've spent time and traded.
That's a good point. Value
Yeah, I
zones.
do the same thing. I mark up all my charts first thing before, an hour or two before.
Yeah, that's good. Sometimes if we're in a bull market, I don't really need to mark up the VPA levels. Sometimes I do, I'll just go off of VPOC, but right now it is crucial, I think, because there's so much indecision. We don't know where we're going. So where the levels are going to work is where we've spent a lot of time as a support, or maybe as a ceiling, as a resistance. So
I'm just marking up the high volume edges, and that does tend to help. Sometimes you can take trade or get out of a trade at a high volume edge based on the value area charts. I mean, based on the volume profile chart.
So yeah, you had the perfect idea here. Obviously, if you would have had that a little bit wider of cushion, that would have worked. But probably in your mind, you were thinking, okay, I don't want to take a full stop out, so let me just cut this. And then sure enough, the price action tricked you into selling, and then it left. So
No, I mean, here, between these two orders, I was in a quarter of core size.
Okay.
It wasn't until here and here, or till here, where I added to full lot and took off 75% here, so as to not lose much, right?
Oh, okay. So you took some off in the money.
Oh
from
yeah,
that.
yeah.
Oh,
Because
okay.
so once I got my head on straight and realized that my thesis was correct, right? This equal 25%. Then here, I don't know which one it was. One of these two was full size. I took it off. So now I took off in the money. I don't know, 30 cents, 40 cents. And then I saw my thesis was actually could work. So I put on a little more size here. I think I was back up to a half size. And then as Indo popped up,
Yeah.
I
Yes.
I put a very tight stop loss, not even a reasonable stop loss, right? A better stop loss would have been somewhere in here or even down here.
Yeah. And
But
that thing
I had a
halted.
better, yeah, I had a better situation pop up. Better
Yeah.
meaning in my playbook that I just left Apple alone.
Mhm.
But in hindsight, what I'm going to work on this week is I'm going to, like I said, I'm going to set limit orders here for very small size. So if this thing, if this thing continues down, even if it continues down, like I'm going to set limit orders here and here, but I'm going to know my max risk level, right? Like you
Mhm.
said, maybe my max risk level is 159. And even if I take this loss on these two entries down to 159, it'll be insignificant relative to what a full size trade would make me.
Yeah. And I mean, I was watching it minute, tick by tick, and I thought it was going to break through 163 and kind of break down. So, I mean, I feel like it was sending the right signals to get out of the trade. The other thing that I'd like to ask is I was watching that video on the tape reading by the short bear. I really like that. And I think it's so cool how they build and then trim positions. In a situation like this, let's say hypothetically, maybe you're saying your stop is at 159, 160. If you were over added or even at this kind of quarter of a core size, do you ever trim positions if it's not working on the way down, to minimize the loss? Because I noticed that he was in that video, he's like adding, and then well, in another video, he was adding, building a position, but then when it wasn't working and he has his main level that he's playing off of, he's, I think, trimming as it approaches to minimize some of that loss. So do you
Yeah, I
ever do
think that's
that?
what I did here. I don't recall, but I think I trimmed. Oh, what is that? I think oh, there we go. I think this exit here, the first one was me trimming because I added and then realized Indo was coming. So I trimmed it and then set that hard stop. I
And
think I don't
so like,
remember, but
and
I mean,
then
this loss was a 0.25 R loss. So to your point of trimming and adding, yeah, I managed my risk a lot better than I had to, because this was kind of the level to trade off if I was going to get in here or here, the level to trade off, right? This wick right here.
Mhm. And then how does like what goes like kind of through your mind if you're deciding to trim a position? So like let's say in this example, you were maybe even full size in or half size in, not quite a quarter. Maybe as it's pulling against you, you'll check some higher time frame levels or you already have it marked. But what's like the deciding factor to start trimming up a position to not make it, to not let it get any worse in case it does keep breaking down?
It's a little tougher for me on large caps because, like you said that it looked like 163 was going to break down. I saw that 163 was not going to break down because they flashed this. I remember they flashed the tape down to the 180s, but then they would reclaim 190s pretty quickly. And even though they weren't reclaiming 163, every time you saw 163 flash on the offer, there were no major orders until the bid got up in the 90s. Once it started pushing up and demonstrating that it was holding the 90s, then 163.05 and 163.03 put in larger liquidity. But at that point, when they're putting in that larger liquidity, it's not a stack, right? It's not a defensive resistance stack. It's a come get me stack, like your buddy over at BBT talks about, right? They're going to chase the supply. Price action is going to chase the supply.
Yeah.
You know what I mean?
Yep.
They're going to go get that, and then it's going to pop through and carry higher. My mindset on this was honestly at this point, since I did not follow my thesis and I made poor decisions illustrating C game, you know, in the words of Jared Tendler, A game versus B game
Yeah.
versus C game, I thought is just better given the opportunity that came up with Indo, right? That was for me is a heck of a lot better opportunity than Apple.
And
So
how
I
did you
chose
trade Indo?
this. I traded it amazing.
Okay, good.
Yeah.
And so when
wanna
you
see
look
that
back,
chart? You want to see that chart? It's
yeah. And then when you look back at this, like kind of how does it make you feel?
this loss.
Yeah, I mean, obviously you don't care about the loss, but I mean, like the quality of your trading, how does it make you feel?
Oh, I think during my trade review this morning, my mental edge review, I gave this an A minus bail, right? Because I made poor decisions. I entered before my thesis, which is a C, but I took off size and I read the tape well to get out of here with a minimal loss,
Yeah.
which I think I rated. Yeah, I'm looking at my notes out, which is a B plus. And then the fact that I cut it completely for a new opportunity was I think I gave it an A minus there,
Mhm.
right? So if you average that out, whatever it is, that's probably, this whole thing equals either a B or a B plus, something like that.
Okay.
So in hindsight, I think the fact that I recognized all of this during real time trading, that to me is a progress of, because a lot of times we can get fixated on a particular stock and several other opportunities will pop up, but you miss them because you're so fixated on what you're dealing with, right? And so I didn't. So I was really happy with taking
that's
this cut,
great.
setting it aside and moving on to something that fit my niche a little more. And at the same time, I was very proud of the fact that my thesis was spot on.
Yeah, you were right.
Right. If I execute, like I said here, right? Trust your thesis and execute it, and you'll be rewarded.
Now, is there ever a time where instead of completely cutting the position off, you just, let's say, would have let 50 shares run? Like, who cares? Or is that not really following your thesis, your plan? So probably not best
Yes
to do
and
that.
no. Yes, I would do that if I felt good about the trade and I was still fully engaged. No, in this instance, because I had already recognized that I had poor execution or poor read on the tape on the trade because I got in early, or I was FOMOing, however you want to look at it, right? Because I did this and I did this, I'm basically telling myself, okay, just, make a decision here. Stay engaged or don't. I noticed I was disengaged and I just cut it. Does that answer your question?
Yeah.
So it was an in the moment kind of thing because of multiple scenarios, right? Not just that trade, but because of what popped up, the other opportunities I was able to get.
But are there days where, let's say, kind of situation like this is happening, and then you'll say, you know what, I'm going to let 50 shares run to my down here, or at least to here, and I'm just going to look away and just set my stop loss and kind of let it all work?
Not if I've already broken my plan. Plan your trade, trade your plan. I planned my trade. I didn't trade my plan. That right there already told me C game on this trade, right? So
Yeah.
Reduce your risk because you're not on your A game or even your B game.
Okay, cool.
So, but again, a lot of that had to do because Indo popped up, right? It took my my attention, took my focus away.
Okay, this is Indo.
Yeah. So for me, this is an A triple plus setup because there's a halt. Okay. So this orange line right here is a halt.
Okay. Oh, that's cool. Your chart plots the halt line?
No, I plot them.
Oh, you plot it.
Yeah.
Oh, that's nice. That's smart to do.
Yeah, I always plot the halt. The halt is a major level of resistance and support, right? It can, I mean, it's an attractive level to price action.
Yeah, I mean,
So
that worked nicely off of that.
yeah, so I plotted the halt and then I wait for my extension. So my extension is typically from here to here should be about 5 to 8%. I think this one was larger, and that's why I was managing my risk, right? Cutting size, reading the tape, adding back, and then cutting the size again, and then adding full size. Right. And then at that point, I knew, like you can see here, right? This is, I had a very strong feeling about this thing fading like it did, because the float was super small, and the shares, I think the float on this was 1.57 million, and the shares were extremely hard to borrow, very difficult to find. Fortunately for me, on day 2 this was ETB, but on day 1 I had the shares in the morning when it first popped up, and then I was like, okay, I'm gonna wait until this thing pushes higher, and then once it pushed higher, those shares were gone, and my broker couldn't find more shares. So day 2, I knew the shares were very difficult to find. They were going to be even more difficult to find because now it's day 2, and a lot of shorts want to play that day 2 fade, and so I had very high conviction, and that's the reason. I was full size here, and then I added more, making sure that I didn't get my average below a predetermined amount, 725 right here.
That's awesome.
But not only the shares being very, very hard to borrow, but also the imbalance from the previous day, right? This trade was on the 28th, but on the 27th, we had huge imbalance from 7 to 750 seller imbalance. So I knew there was a huge seller or many sellers sitting in this area. That gave me even more conviction to hold.
Okay.
So as you can see, just from my trading and from my discussion of the trade, like my confidence level, just even in explaining the trade, is much higher because these small caps are more my bread and butter.
Yeah, I mean, I'm surprised at full size you didn't even trim anything here.
Yep. That's the kind of conviction I had on this trade.
Now, let's say, because I was watching some of those videos on the short bear, that guy, like, he does like 10 ads, like right here and here. What would you say the difference is between the way he's doing something and this? Obviously, this is more precise, I would say. But
Well,
maybe
he's
adding more size.
He's piecing in. So that guy trades upwards of 20,000 shares on something like this, right?
Yeah.
I'm trading more, depend on the price point, I'm trading 5 to 8. Right now I'm not trading more than 8. I think on this one my total size ended up being 7.2 because I didn't get fully filled on this one. And then here I think I added 250, and then here I added 1,000.
So these are not huge ads. Okay.
No, of course not, because I don't want to bring my average down, right?
Okay.
So these two got me to this, right? So subtract whatever that was, 1250. That's where I was when I was full up here.
Mm-hmm.
So yeah, it should have been a little less, because this up here I was at I'm looking at my notes now. I was at 6K here, and then added, guess what turned out to be 1.2K.
A handful of months ago, were there times you were trading above 10,000 shares?
Yes.
I think I remember that. Now, were you struggling with sometimes like the fills and seeing kind of some problems there as that was happening?
No,
'Cause, I mean,
liquidity was
growth.
so high. Sometimes I was taking that full entry on just one order, one hotkey, but I was slamming the bid,
Yeah.
right? Whereas if it was a little lower liquidity, I'd have to break that up into maybe two orders of 5.
Okay.
But my size, in most cases, my size is dependent on the liquidity. Now, right now, I'm not so much concerned with the liquidity. Yes, volume is down overall, but more importantly than that is the way that in these small caps, the way that they're manipulating the spread. Like a lot of guys have mentioned it and also reached out to me and saying how they keep the offer high, you know, and I think I talked about this a few weeks ago. They'll bring the bid down, right? But the offer won't chase it. And then they'll just trap a bunch of shorts down here and then bring the bid back up,
Yeah.
right? And now you have a bunch of trap shorts.
I
So
feel like
I'm
that's
not,
happening with big caps too.
yeah, so I'm not eager to get in on the bid unless I see this. Like when I'm watching the tape so intently that when I see the bid, if I see that there's already a seller engaged and I see the bid move back, flash back up to a tight spread, I might hit the bid real quick there, but it's kind of you know, in the time that they do that, they could move the bid right back down.
Yeah,
So
it
let's just say if I
conveniently.
put 7,000, 8,000 right here and it fills me down here, then I'm
Yeah.
hosed, right? So I'm just putting on small chunks at a time.
That's great. Yeah, I asked that because I was wondering if like you were starting to feel like kind of almost a growing pain of that, because that's as you get
No,
to.
no, that's when you're upwards of 20, I believe. I've never traded. I think the most I've ever taken was like 16, 16, slightly over 16K shares. I've never traded more than that. And that was, you know, just a handful of times on super A plus setups. But yeah, now as you can see, now I'm down to even reluctantly half of that, right? I'm 8 max.
Yeah,
And that's based on price point too. Like this one based on price point, this should have been more around the 4 or 5, but the conviction of this thesis was so high and the things I explained a little while ago that I was willing to use more bullets on this trade than
Were you already
normally.
up well for the week, so you felt more comfortable to do that, or what's the risk management behind that? Because let's say the thing just starts chopping here and curls back up, like we've seen some of them do. Um,
Then I cut it
I,
break even and no worries.
okay.
That's just embracing variance. I don't care what. Once I'm in a trade, once I nail the entry, and I have a conviction of a certain thesis. Obviously, if this was a day one, I would have, like you said, right? I would have taken some off here because it could hold up on this spike. Then I'll take some by rule. I'll take some off at the halt level, and then I'll definitely take off some here because it's a demand zone, right? So I might not be, you know, up to this point, I might be only left 25% of the position, and then I'm going to be a lot more reluctant to add here because I'm going to wait for the high a day breakout for ads up here, or for this thing to go up and add higher.
I see.
But this is a day two, a lot of what I mentioned conviction wise, imbalance, very hard to borrow, etc. The market is really slow. Small caps aren't really running the way they were a few months ago. So I'll embrace the variance. I had initially here, I had a 748 average. And then after these ads, I was still above 725. I mean, if they come back and get you up here, so be it. That's just, it happens. But no, I don't, to answer your question, no, I don't care what I did yesterday. I don't care what I did the day before yesterday. I don't care what I'm up or down on the week. I'm treating every single trade as an individual piece of a greater statistical component, right? The concept of 20 trades or of 100 trades or whatever.
I asked that because lately, what I've been doing for my trading is like if I get to Thursday or Friday and I'm having a solid week, I don't start those days off with my full size. I'll start with more feeler positions to see how things are working, because too many times I've had a great week and then I get to Friday and then I just give back more than I should have. And, you know, maybe things weren't working. I wasn't trading as well personally. So like lately, just kind of from a risk management standpoint, I've been more aware of where I stand on the week and then how should I manage the rest of the week. And I know a lot of people don't maybe like that. They think, oh, just focus on what your daily max loss is and things like that. But I've just found that if I'm more aware of where I stand on the week, then I can kind of manage myself a little bit different. Take
I would
feelers back,
say, I would
things
say
like
that in a macro perspective, that's an excellent way to manage the overall quality of your account, right? Which is
Yeah.
great, a macro goal. But I would say that also little by little, you want to try to educate yourself to get away from that mentality, because the market has absolutely no memory of what it did yesterday, right? Sure, tickers tend to have very similar price action, but I mean, this could have easily gone to 20, right? Or it could have easily gone to 2, right? And you never know. And so if those opportunities are there, for me, you know, halt and fail, imbalance, very hard to borrow. Like, this just posed a situation where there is more, how does Brian Lee say it? He says there's more downside to missing out on a 5 or 7 R trade than there is on taking a 1 R loss. Right?
There's more downside
Yeah,
too.
yeah. Psychologically, this is more detrimental to your trading than this is.
Yeah.
Because this is the cost of doing business, right? Taking small losses is just part of the variance. But when you consistently miss out on these due to hesitation, that is worse on your long-term psychology of trading than taking several of these.
Yeah.
Because if I take, let's say I take 3 of these in a row, right? And then this trade ends up being, I take it finally, and this trade ends up being 6R. Well, I netted 3.
Yeah.
Right? Whereas if I take these 3 cuts and then I quit on it, sure, I quit on it if my thesis is broken, but if my thesis is not broken and I quit on it, I just swallowed a negative 3R loss for no reason, where I shouldn't have, based on my trading system. I should not have swallowed that 3R cut.
Yeah. Okay,
Right.
guys, any questions for OTC, or do you think you guys can all trade 5,000-10,000 shares on this?
Yeah, one question to OTC, so that imbalance information. So how do we get that imbalance information? It's quite interesting. So is it from Sierra chart or somewhere else?
Yeah, it's from Sierra Charts, a number bar study.
Okay.
Yeah, that's called number bar study.
Can you please walk us through real quick on that imbalance? Just to understand.
I was going to ask the same.
Okay.
Before, OTC, do you have a higher quality one?
Yeah, I was
you
about
can
to
send?
say I'll
Okay,
send you
cool.
a better image. Yeah, good call. You read my mind.
Cool.
Which one is that? That's
On Indo, the 27th.
I don't think I have that one isolate. Oh yeah, I do. Yes, I do. I still have it. Here it is.
Yeah, I downloaded Sierra Charts, and I got to sign up for the free trial or something, and then go down the rabbit hole. So we'll see how that goes.
There you go.
What I love
Look.
about small caps, though, is like when
think
it
that should
works, there's so much more conviction and like, you know, how it's actually going to happen. You know, on a big cap, you don't know if it's going to go and reach certain levels. I mean, you don't get these like all day runs that you have conviction in. For instance, on Apple on Friday, how did you know it was going to run to 169, 170? You know, it's like, It's you kind of don't. I mean, you can read the tape, and then that can be your signal to hold the trade better because you see this consistent buying on the tape. But it's such a different ball game compared to uh, small caps. You know, in small caps, you're trying to get this whole move, where in big caps, when I'm trading, I'm trying to get this move right here.
Yeah.
And I've got about as much conviction from here to here. You know, rarely am I thinking, oh yeah, today's the day, we're just going to run all day. So big caps, that's the only downside that I don't like about big caps is your price targets are not as kind of set in stone as some of these faders, where these have very clear targets. And on big caps, Jay will say there is no target on big caps. You know, you just gotta, you're using different trailing methods. So that's the one downside I don't like about big caps. That all the time makes me want to trade small caps, especially when you guys get these fades like this day after day. Like I remember months ago, there was just every day it was just like short the golden zone rejection and you get an all day fade. And then, I mean, that's dried up now, but there was a time where every day this was happening.
Eric, you can catch moves, man. It depends on the day, right? Like this, not criticizing anything you're saying or Jay says, but I can show you a trade that I showed Jay last week that with futures that I took, and if you get into a position where you've taken your profits and you have one, I'm using contracts or a quarter of your position, you can let it run. When you're having 800 point moves in the markets, we can still get moves on them, right? You just have to have the diligence to let that thing run and maybe leave your stop at break even or something like that, right?
And also having the risk management style to like allow it to kind of run.
Exactly, right? I think for me particularly, because I'm struggling, well, not struggling, but learning to trade, and you want to be consistent so often, you want to book profits habitually, right?
Okay.
Well, when this market started happening last week, I said, you know what, we're getting 800 point moves on these things, and I'm not going to make profits so quickly. I take my profits at my normal target levels, not targets, but with my trails and stuff like that. But I'm going to leave a contract on in case we keep going. And I ended up catching like 600 points on a move.
That's smart.
You know what I mean? Like, and it's just, I was risk free. I said, why do I need to cut this right now? I made money on the trade, and I left for the day. I put a stop in, and I left for the day. I came back 3 o'clock, and I closed it at 355. Have I been able to hit that again? No. But often I'll leave that contract on now, and when it comes back against me, I get out of my break even. I'm still doing great. I've hit my R multiple plus more, but when you get a 10-hour or 12-hour trade because you left on that, more like OTC was saying earlier in his trade, it more than leaves for it. Now, with stocks, it hasn't been as easy, but I don't know, I don't know what Leo's saying. He trades futures a lot, but I think, he's probably doing something similar as well, right? He plays targets, does he not?
Oh yeah, I put my targets on before I ever take the trade.
Yeah, and I do the same thing with when I futures trade. I'm doing the same thing. Like you're looking at levels, and like I know Leo does a lot of market profile and
TPO
order flow levels, right?
Yeah,
I think you really can. You can look at, like, if you're looking at, like Eric, you said you look at daily levels on your big caps.
Yeah.
Well, is that daily level not significant for you to take profits? Like, if you have, let me throw an example at you. Let's say you get into an over under and your first target's 2R, but there's a significant level at 1R. Are you not going to consider taking profits at 1R, or vice versa? Let's say that significant level is 3R. It kind of gives me more inclination to say, hey, I'm going to hold this past 2R because I think price is heading to that level, if that's part of my morning thesis, right? So I think you can apply levels to, and it'll kind of help you and guide you, because often, how many times have you taken a trade and you got out too early because you got stopped out on a trail, only to see price carry on? But where's it going? Often they're gap fills on big caps that price likes to seek out, and the same thing with futures. I just thought I wanted to throw that in there. As long as like you said, Eric, it's risk management. If you're in the green, then why not hold a portion, 25% of your position, and let it run?
Yeah, no, you're right.
That's why
In this
if you
market,
pull that Apple chart back up, Because this
But that-
goes
like
good
I
to
was
the point
saying
that
with that
Trader
apple,
Patron is saying. Like
like I
that's why
was,
this was the target, right? Because when tickers run after hours, they don't have as much liquidity or demand. And so I saw this as the first target. All this is very thin compared to what this is going to be. And that's why that was the first target, an overshoot of this wick here.
Yeah. Yeah. So
And
you
that's a
got
level.
target levels. I think it's important. I mean, it's good to trail, but 2R or 3R, it really means nothing to price and supply and demand. You know, and I think if we target the supply and demand areas and the important levels, for me, it's working out better. And again, it depends on the context, right? It really does. Like, what kind of market environment are we in? Well, last week we were in a trending environment. The market was a waterfall, and you could catch bigger moves. This week we were kind of chopping within a range. Mind you, it was a big range, and you could still get big moves. You know, like look at Tesla; it's all over the place, right? If you know your levels and you can target those levels, it's really, really helpful.
yeah,
I just
Yeah.
posted a book map where I have one of my columns that has all my levels on it. I don't know if you just want to show it for a second. It was a trade that I took, a short. Turned out nice. So basically I've got HVE levels, I've got directional levels, I've got target levels up and down. You might want to make it a little smaller or scroll down.
oh, sorry.
But this was a trade that I took. I had some single prints on a TPO chart, which was my first target. I had that on another chart, and then my second target on a 2 contract trade was at the VWAP. I got out at the VWAP, and then that thing just took. I mean, it was 100-point move from the VWAP to the end of day yesterday, which I did manage to catch some of the move up. So just to give you an idea of how I mark up my chart, especially on Bookmap. And I'm using it as
For me personally, Leo, it's a lot of work for me to learn all that, and I intend, it's on my bucket list, but I can't do it right now with everything I'm learning in the room, and I just have to kind of pace myself because I give myself information overload, and then I start getting conflicted, and kind of screws up my trading a bit. But for now, it's a plan for me because I think it's very important. Market profile is very, very important. I think ultimately what we're doing here is playing the game of supply and demand, and I think it's probably the best indicator of supply and demand on the charts, right?
Yeah. If you want to bring up the second chart I just posted, you'll see the actual trades. It was a over $2,000 day. And I missed it because I got out of my first short trade, and then I walked away for a while, and I'm like, oh geez, look what's going on here. So then I was watching my TPO chart, and I noticed that the algos was strictly algos. They were going for the previous day high, which they got, and so I took a 10-point trade on that at the 9 EMA.
And
Leo, what do you target? Like, what's a good like average target for ES for you? Are you doing 10 points, or like just because you said 10 points?
Well, I took 10 points only because I saw an opportunity on the 1-minute chart at the rejection of the 9 EMA, and that's all I could get out of it, and that's all I knew I was going to get out of it. And then of course the market turned down after it hit that target. Right. The target was based off of yeah, I could put up another one real quick. Here's my TPO. Yeah. Okay. Well, this was a little bit earlier in the day in the TPO chart, right about when I exited the first trade. What? There you go. So the chart next to that is the overnight session, and then the third one over was the previous day. And so when I came back later in the afternoon, I noticed that price action in the subsequent to TPO periods, which are all based on half-hour periods, it was screaming up higher. So I saw that and just jumped on it. And of course, it did go to where I thought that target was.
So it was simply an order flow trade then, right?
Oh, that was completely an order flow. And I marked it down as such in my notes that I sent to. But what the conviction was is not only was it order flow, but it was also a rejection of the 9 EMA on the 1 minute chart, which was my signal.
Yeah.
Could any of you guys, I mean, Leo and Trader John, OTC, go over some of your strategies for identifying imbalances? We still have time.
Yeah, let's rotate back, I guess, to OTCs. You guys want to go through this? Is that what we're still saying, right?
Yeah.
I wanted to hear about this.
Thanks for listening.
Thanks for telling us, man.
Okay, so I'm going to keep this in a question answer format. So someone please respond to my questions. Some of them will seem pretty basic, but
Okay, I'm gonna let you
there's
guys
a point.
do the responding. Okay.
So this is a
Don't-
bid,
don't
and this
put it
is
on
an
me.
ask, correct? Everyone agree?
Yeah.
Yes.
Okay. Now, does this what does this represent? Which side are the buyers, and which side is the seller? And Leo, you refrain from answering because I know you know this stuff because you use TPOs and stuff.
Yeah,
Unless you don't.
I won't answer. I'm just listening.
Okay.
Yeah. So the left-hand side is the buyers and right-hand side is the sellers, right?
Okay, so you're saying this, right?
Yeah.
Okay, so that's actually the common response, but it's opposite, okay? Now think about why. Can you, what is
Yeah.
this? What is this? What do these numbers represent?
Because the people are asking for a price, right? So if you're a seller at a store and you're selling apples, you ask for $2 for an apple or whatever it is per pound. So you're asking for the price. And then let's say you're the bidder and you're like, yeah, no, $2 is too high. I want to pay $1 for an apple. So you're offering $1 or another guy's offering $1.50. So that's the concept there.
Yeah, they're
Great.
putting liquidity in the market.
Yeah,
So
there
they
you
have
go.
a allotted size, and then like the green and the red, that it depends on if the person that is putting the order to take liquidity out, it's red because someone's putting an order in to take out the bid, or if it's green, someone's taking out the ask.
So both, in my mind, both the analogy was great about demand and supply and demand, right? Thanks for that. Mark, what you said is I don't see any reason to dispute that either, but I'll just put it in very simple terms. That represents this, right? Tape. This is tape. This is volume profile, which is what Eric was showing earlier on his DOS charts, right? The volume profile bars with the VPOC, the volume point of control. That's the same thing, except now you have the tape. There's the volume profile, and now you have the tape inside of it. So this represents the sellers and buyers if you think of it in terms of big fish, right? If you think of it in terms of whales. And the whale is going to push the price down, and the whale is going to pull the price up, right? And then on top of that, what they do is they trap liquidity above the level they want, right? So all these buyers that chased, let's call them the apes, let's just say the apes, the Robin Hood traders, when the market maker decided to pop the price action over 7, what do the chasers do? The less experienced, less knowledgeable traders do.
They take liquidity out and they try to get in chasing the price action.
They chase, right? Yeah. They buy above the ask.
Yeah.
And so now they're trapped. So now the segue, okay? So that's the right answer there. So that's not, I mean, obviously none of this is concrete. All of this is speculation, right? But if you use an indicator like such over and over and over and over again, you can see that that theory works, okay? Now, what does this show? This shows if you subtract 491 minus someone have a calculator real quick? Is that this value? 26.24? 2
I
point,
got 2.63.
okay. So this minus this equals this number here, the 2634. Notice the K. So that's millions. So that's imbalance of how many are trapped idiot buyers, just to emphasize the point, versus the whale who sold through that price level, right? Who sold below 7. And so now everyone above here, in theory, is stuck, bag holders. And I can completely argue that that's true. Pull up, go back to my trade, Eric, please, on this, on Indo. Look at here, right? We were just looking at 7. If you scroll over, I think 7 is like right here, and then 725, something like that. And then that's where we said had all the bag holders, right? Under 7. And what happens? The price just fades off because all these people are trapped. And that's what the market maker used to pay all the syndicate riggers of this stock, right? All that profit. You can go back to the order flow candle. Thank you. Does that make sense?
Yes, that makes sense. So one question here. So the largest imbalance, that means the largest red volume profile candle, that is the key area, right? The $7.
Yes, but I don't take the trade until I see a stack of imbalance.
Wow.
Because look at this stack of imbalance, right? Kind of lower value. Obviously, this was a bid from the previous day and the previous day, or maybe just day 1. Actually, that's not true. This is day 1. Sorry. So let's just say on day 2, you still have this imbalance, but throughout day 2, you saw a big demand level come in here, which you can kind of see, right? There's a blue bar, that's demand.
Okay.
The way these are color coded is if this imbalance is greater than 300%, it gives you a dark red. If the imbalance is greater than 200%, it gives you a medium red. Same with the blue. This is 300%. This is 200%. And then the lighter blue, I don't have it, is 100%. So you can set the colors on those. But yeah, so I look for a large stack of imbalance, not just, and you use these values relative to the float and the volume the ticker is doing. Obviously on Apple, right, this imbalance is insignificant. You'd want to see like a 10K and a 9800K and a 6500K imbalance here. You want to see much higher numbers because that ticker has a float of, I don't know, let's just say it's 7 billion. I have no clue what it is, right? And it's trading, 1.2. It's our vol on that day. So
What's this called again? I'm sorry if I missed.
it's just called a daily order flow candle.
Daily order flow candle.
Yeah, so this is Leo Trader uses TPO, which is time price order
Okay.
for futures, where you get the X's and the A's and the B's and all that. That's based
Right.
on time. This is based on, so he's using a TPO. This is a VPO, volume by price order analysis. It's just order flow. It's nothing different than you're seeing here. Level 2 and tape. Actually, it's not this. It's nothing different than you're seeing here. This is tape with a volume profile. It's a visualization of tape, and you keep a nice history of it rather than having to scroll through a traditional tape.
Yeah, it's like using Bookmap, but not really using Bookmap.
Well, Bookmap is not. Bookmap is this. So this is Bookmap. level 2. This is tape.
No, I'm talking about in regards with how you could see levels. Like you said, this is 659, right? Then we have a huge order here at 725 and then 750 because of all that order imbalance. That's kind of what I meant.
Okay, gotcha.
Can I ask a question, OTC?
Absolutely.
So using that 4.9 million order, that's a seller, it's a whale that sold on the bay?
Mm-hmm.
Okay.
Not one, I mean, it's obviously not one whale, but just to keep it in simple terms, that's how you think of it, right?
Yeah, no, I get it, but those orders were sold on the day, is what you were saying, right?
Oh yeah, this is volume transacted.
Okay, and then that 5.83, it's also in red, or is that just the volume profile that's covered it? Like,
No. So the red bars represent an imbalance.
okay.
An imbalance, a percentage imbalance that you can change on the study. You can change it on the study to 200. Like this is 300%. This I think is 100%, and then there's a color in between these, a red that's a little lighter, that would be 200%.
Okay, I follow
Actually, you can notice it. Do the math right here. What is the percentage of 4.9 over
5.83
over 2.28?
Almost 100%.
100%? Yeah, right. 100%. So this is 100%. Now do the math here. What is 1.86 million divided by 609,000? What's the percentage there?
300.
Yeah, 300%, right? So same here. The blue, the dark blue is 300%, and the lighter blue, this one I think is 100%. But the imbalance is opposite, right? This minus this on the buy side, 45.5K minus 20.9 represents, that's a period right there, represents this 16. Actually, no, this 24. That would give you the math.
Wow. This is nifty.
The 24.
So the 5.83 number, just for my own head's clarification here, is
Absolutely.
a buyer getting in on the ask.
For your own clarification, the 5.83, well, this right here is the tennis match, right? This is the fight. This is the tug of war. When you look at it horizontally, that's the tug of war. That's buyers and that's where'd it go? That's sellers and buyers fighting to dominate the 7 level.
Right.
Right? And yes, that's sellers ultimately won because price action is below and faded to whatever it faded to.
And those are also edge levels. So you can mark those levels on your charts to know if you don't have your volume profile up.
Absolutely. Yeah, those are important levels. Those are demand zones.
Yeah.
If price would have gone up here and there's another significant imbalance like this one that appeared up here, where's my target? Right? Like Trader Patron was saying, well shit, my target's gonna be at this buyer right here.
Yeah.
That's my first target. Or maybe I'll take a little bit off at this buyer if the number is significant. Maybe I'll take a little bit off at this buyer's level. But based on the stack that I see here of sellers versus buyers, if I get in on a hyper extension, right, if the price action just goes parabolic and the EMA is down here, and this represents my entry up here, right, and that demand zone is down here, yeah, I might take a little off at the MA, but the bulk of my profit target is going to be here, where is that Leo or is that Trader Patron is talking about?
Yeah. I think both of us touched on it, but okay, I have one more question, guys, just to help me understand this. How do we know, just based on going back to those two numbers, I'm focusing on the biggest numbers on the volume profile here, 4.9 and the 5.8. How do I know what was placed on the ask or the bid. So it's very, like, I don't know if, like, and then how do I know if they're sellers or buyers? That's where I think I'm a little bit confused on it.
Great question. So a lot of the guys in the room that I'm in that use this focus on just this, right? They focus on this and a couple of other tools that we use. I don't. I use this. I use this for the color, and I use this. And this is the answer to your question. You cannot see that here.
Okay.
So I use level 2. I put this order flow candle basically right here, right? And then I have my chart over here. Because I don't really care. My focus, my eyes are here. My periphery is here. And I'm glancing at this, which is this, in order to see these imbalance levels.
So that's what I was just gonna say. So the main sole purpose of this indicator or tool is to see the imbalances, right? And the major price levels, I guess, where there's more supply and demand.
To me, yeah, to me that's what it's translated into. Yeah, definitely. This, but also keep in mind, like my Indo trade, right? If you go back to my Indo trade real quick, notice this is the 27th right here. Okay. Click on my Indo trade real quick, Eric, please. This is the 27th, right? So that's what we're looking at. But this trade was taken on the 28th, right?
Okay.
So this imbalance from the previous day, this data, you can go back to it, Eric, thank you. That data from the 27th from the previous day was also part of my trade thesis.
Yeah. I get it now. Thanks for that, man. I really appreciate it.
Absolutely. I hope I answered your questions.
So I guess that's what helps when you play with the higher time frames, because I remember asking about how, you know, there's a lot of noise in the 1 minute, and sometimes you see a candle that stuffs but then immediately reclaims after, and that always has gotten me messed up. But if you were able to see where the levels are using this, it should help with the conviction, right, in regards to what levels you see the supply zones are at and where you want to short before you even decide to take the trade.
Yeah, so Indo is a perfect example of risk management, right? If you look at Indo, I was taking off and putting on size in this area right here, basically between, I was doing it between 7.25 and 760, not down here. I don't want to be in down here. And if this were a highly volatile market where small caps, because they're on low volume, can kind of squeeze out of the blue like Dave did, right? On no volume, like you can see, actually, what was a great example of that?
The volume profile would be more stretched out.
Yeah, because the market maker is able to move it on nothing because there's no one involved. It's almost like trading pre-market or after hours during the market hours on some of these small caps. So my point is, if this would have been a highly volatile market for small caps, like say a month ago, I would not have, this was a day 2, I would not have taken size off when I was in here and re-added it. I would have just been getting in, adding to my size as the candles develop based on a 5-minute chart, because the spread wasn't manipulated because there was so much liquidity, right? A few weeks ago.
Yeah, it was all organic.
Because the spread right now is being manipulated so much, I don't want to be stuck with a 740 average and the bid's up here at, I don't know, 0.90. And then all of a sudden that rigger decides to move the ask, right? All of a sudden decides to move the bid up to 0.75, and I'm in, 8K shares. Does that make sense?
Yeah.
They're manipulating the spread so much that sometimes it's very difficult to get filled up here.
So even something like this, oops, my pen is gone. Even something like this, where you can see the levels where the supply zones are, that won't matter as much in a low volume market?
It matters a little less because they can, like I was saying, they can manipulate the spread and continue to squeeze and squeeze and squeeze and squeeze.
Okay. Okay.
The point
I
is,
was-
it was risk management, right? I was trying to manage my size.
Yeah, because I was wondering, like, even if they wanted to push it up, right, to $8 or something like that, they still have to go through 549,000 people who are stuck, right?
Yeah, it's a great point. Ultimately, yeah, that's
And
that-
naturally, I would assume, like, through common sense, if the liquidity is much lower and the market makers are running it in lower liquidity, they have to put more money. They have to put more of their own money into trying to break that $8 level. And I wonder, like, is there any incentive to that if the range might not be like the best or something like that? I don't know if I worded that well, but
yeah, no, I think I need to consider that, right? Because what's happening a lot of times in this area here is you have that shelf that's just doing this, right? And so those are scare tactics. And then all of a sudden he does this. If you're a long, that's a scare tactic. If you're a short and he does this, that's a scare tactic. Because your position, your average is somewhere in here, and the price just extended another 1 or 2%. But I see your point. It's a great point that I need to think about. In the heat of the moment, based on size, I'm just trying to manage my size until the move is confirmed.
yeah. Huh. Okay.
But yeah, that's an excellent point. You got to think about that. That you said that in a low liquidity market, the market maker, in order to squeeze price above 8, he has to spend more of his money to get the price up there, to get the bid up there, to get chasers to go chase it up there. Right?
Yeah.
And if there's not enough liquidity, enough retail traders to do that, then he's going to be stuck with those shares. He's going to be stuck with that liquidity.
Yeah. There's higher risk in that.
Yeah, for them.
Mm-hmm.
Yeah.
But then at the same time, like in a more volatile market, it's harder to manipulate because there's just so much retail bias, you know. But maybe they would try to use that to paint a picture, create a certain price action that would attract buyers to move up in that certain price level that they wanted to go. So
yeah, and one of those things is by moving the ask and not the bid up, or vice versa.
Yep.
Moving this up, but not really moving this, right?
Mm-hmm.
So I feel like the reason they're keeping the ask up here and moving the bid down is to trap low slammers. Right? If you trap a bunch of low slammers in here and then all of a sudden move the bid up to here, now they're bags. You got short bags.
You do the same thing with options all the time. Just wanted to throw that in there. I
They
gave up
manipulate the
options 2
spread.
weeks ago. My trading's improved huge. Just from simply trading the underlying instead of options.
You're trading the underlying instead of the options?
Yeah, I struggled with options for this very reason. Like, I'd get trapped all the time. I took the bait and in my learning and stuff, and now I'm kind of playing the trap. And like, if like using a 9 EMA setup, if you take the break, so price comes back, taps 9 EMA, and then you take the break of the trend line, they widen the spread right away. And then once price goes against you, that spread gets wider real quick on options. And then by the time you get out, it's very hard to manage risk because you're not getting out at the level that you wanted to unless you set a hard stop. So if you have a hotkey for that, great, where you enter and it sets that stop right away. Even then you're playing with fire because the option spreads aren't consistent. So a Tesla option spread, you can't have a 10% stop. You're going to get smoked on an option. And whereas on SPY, if you take an option, you can get away with it because the spreads are tighter. But they do the same thing that you're talking about here, OTC, on the options, and they're not as liquid, so it's a lot easier for them to move spreads and widen them at critical times, right?
Mm-hmm. Yeah.
So 2 weeks ago, I I bumped, like I was trading a small account. So I sized up my account so that I could trade the underlines instead of the options. And I've done great. And I had last Friday. So after the first week, the end of the first week, I made that rule on Monday. The end of the first week was Friday. Options on Tesla were cheap. So I got into them, and guess what happened? I got smoked. So I said, no more, man, I'm done. No more options. For day trade, I'll swing trade them in certain scenarios, but to day trade them and try and scalp them, you're fighting a losing battle. And
when you say underlying, you're talking about the futures. You're trading the ES and the ES mini. Is that what you mean by underlying, or what do you mean by that?
So what I was doing, OTC was, main focus would be big caps, and then if I saw an opportunity on the Qs on SPY, I'd trade them with options. So what I've done now is if I want to trade Apple, I'll trade the stock instead of the options. And then if I want to trade the indices, I'll trade ES or NQ. And I'm trading micros with them just to kind of learn a little bit. And it's awesome. You don't have a liquidity problem. The spreads are not there. There's like, it's tight, right? And the cost is cheaper than options. So that's another thing. So option fees will kill you. They're going to eat you up. They're a lot more expensive than trading shares or futures. So it's only a 2-week sample, but my trading's drastically changed for the better by just making that one simple move.
I agree. When I switched to futures, it just has really been helpful in reducing my emotional trading. Get away from those options.
I don't know if anybody else trades options, but if you're a small account and you're trading options for that reason, I highly recommend trying futures because you can trade micros with a small account and you don't have liquidity problems. Like, think about it. You could have an option that you're trading on Tesla that has at 10 a.m. has traded 5,000 shares or 5,000 contracts, or you can have, trade micros that are trading 10,000 every couple minutes, or more, 10,000 a minute, more, so you're just, the odds are stacked against you. Trading is already hard enough, but there's a lot of manipulation in options, right?
I want to add to that, if you don't mind, Tom, especially if you like to scalp a lot, and if you're trading options, scalping on options is extremely difficult for me, and I know that some others have a problem with it too. But scalping with those micros, on NQ and ES, much easier, and you just get to define your risk so much easier.
Yeah, I mean, I know guys that trade them successfully and it worked for them, but for me, it just wasn't good. It's a lot easier to get in and out and safer on the underlying asset opposed to options, and futures is just great for that. But I mean, I've never put out an order that's never got filled on futures.
And could you just remind everyone, for those who don't know, how much is one contract of the E-mini versus one contract of the underlying SPY?
It's all based on, go ahead, Leslie, you can take this one.
Oh, I'm sorry, Mom. 1/10. So if a mini contract on ES pays $50 a point, meaning $1, move, it pays $50. The micros are 1/10, so it pays $5.
Okay.
And then on NASDAQ, $1 move in the NASDAQ pays $20 for a mini contract, and then on the micros it pays $2.
So yeah, there's another requirement too. So there's margin requirements for your account. Okay, so like if you're a small account, there's a minimum amount you need in your account so that you can trade futures. In particular, you won't be able to trade futures if you have a $3,000 account, but you'll be able to trade micro futures. Or sorry, let me reword that. You won't be able to trade the E-mini, but you'll be able to trade the micros. If you have a $3,000 account, you don't need to trade the E-mini. So yesterday with 2 contracts, just trading 2 contracts, I made $700. And I'm not bragging, I'm just telling, just to give people an idea of what you can make or lose trading futures or the micros. You can do well. And the contract cost me 46, I think either 41 or 46 cents.
You can actually trade the micros with less than 3,000. It's better if you have a little more, but I mean, you can start trading with $1,000 account.
Yeah, and it depends on the broker. Okay, so here in Canada, my IV account's 2,000 minimum to trade them. Okay, so like, that's why I say 3,000. You know, I just use that number because that's what I was using in the beginning trading options, and it was a losing battle. It wasn't good. And you know, like another scenario is if I'm trading SPY with options and I hit a really good trade and I'm well in the money and I've taken profits and I want to leave a portion on. If I'm trading the day of expiry, I can't leave a portion on. You know, depending on where you're at and what you're doing. Well, with a micro or a futures contract, you can leave that on as long as you want. You can swing trade it, and there's no time decay. And you know, so it really kind of works in your favor. You know, a guy like Brian Shannon trades like that often, and what he'll do is he calls himself like a in between a day trader and a swing trader. And what he likes to do is he'll look at the daily or the weekly chart and take trades off that, and he'll day trade it. So he'll book his first 1 hour or 2 hour and then move his stock to break even and run that for days if it lets him, you know, run a portion of his position, which is something I'm trying to work on a little bit. I don't know if I'll let it run for days. I don't like leaving money in the market, but and that's why I chose day trading. But you have less odds of success trading options, and a lot of people get, and I'm guilty of it, a lot of people choose options because they have a small account and they want to get trading right away and they want to start making money. Well, it's going to end up costing you more money in the long run, especially as you're learning, because you're adding a few more elements to things. Like Tesla can have $1.25 spread on the option. You know, that's tough. And then, you know, people want to trade Tesla too because it's the mover. Everybody talks about Tesla. So instinctively, subconsciously, there's FOMO there.
But options on futures, they have pretty tight spreads, and they're easy to get in and out of.
Yeah, I've never even looked at them, but yeah, and I believe you, but I mean, the liquidity alone and I don't know how much liquidity is in the future options, but
there's a lot.
SPY and QQQ, there's liquidity there. They're pretty good, but they're more expensive to trade for me, anyways, in my broker. I was 75 cents a trade. I'm a little more than half of that with the futures contracts, right?
Yeah, and I mean, the problem with options like on the Qs or SPY is IV is something that people don't consider, and IV can have a tendency to collapse, especially if there's a sharp turnaround. And in any case, you may have a stop on options that because of slippage or because of a sudden widening of the bid, which I've seen on the Qs. I mean, especially if there's some momentous event, I've seen the spread go from 4 or 5 cents on the Qs to 60, 80 cents. And traders say that's an anomaly, but with every anomaly, there's also a risk, which is inherent in trading. So I used to trade options on the indices, but the only reason I do that now is for longer term swings, and then I trade slightly different contracts like monthlies for those.
Yeah, that's the only options I touch as well is weekly contracts.
Yeah.
But to add to that, right, kind of a question and a comment. Correct me if I'm wrong, but that spread, that lateral movement due to the spread is also killing your theta.
Yeah.
Right.
Yeah.
I'll give you guys another
And
example on the
have
theta
that
too, and
trading with the
volatility.
micros.
If you were, let's say you were trading Apple 2 days ago, and you're long, and Apple comes out with their earnings early, like before they say so. You know, they've announced earnings, and you know what happens there? You get what Pete said, and you're implied about what they call a volatility crush.
Yeah.
So options rise in volatility leading into big events like the Fed meeting or earnings or something like that. And then once the minute the meeting starts or the earnings are announced, that volatility goes down. So price goes down with it, and it can go down 50% in a second. So you could be in a trade not knowing that earnings is released, and you're in a $3 option, it's at $1.50 all of a sudden.
That actually happened to Apple about 5 or 6 years ago. That happened to Apple. They pre-announced before their time.
Oh man.
And people got slammed.
Hammered.
But that's
Before we
different
get
than.
off topic, I do want to add that if anybody is thinking about trying futures from this conversation, Please, please, please never enter a futures trades out of hard stop. You can get wrecked.
What were you gonna say there, OTC?
Good tip there, Texas Quacks. I
Thank
don't know
you.
I don't know your name. Sorry.
Leslie.
Leslie. Yeah, never entered in that I know. There are some advantages of futures contract. Those for those who are not familiar at all. It's one instrument, right? Whereas with stocks and options, we're bouncing around multiple instruments. These futures guys, they trade one or two or three instruments. A lot of guys who are really good only trade one or two instruments. And on top of that, it teaches you a lot, and Tom can probably speak to this. It teaches you a lot of discipline and patience, because there's times where the futures are giving good, strong moves, and there's other times where it's just like you have to sit on your hands when the volatility is down. I believe you have to sit on your hands on those futures and trade it a little less.
Yeah, you actually made you brought up a good point about something. I also had a problem with, Jay tells us to, only pick two stocks, one or two stocks, and stick with that. And what I would do is, maybe when I was doing large cap options, I would start with VA and Tesla. And I'd have that on my chart, and I was a good little girl, and that's what I watched at the open. But if I didn't catch the move, or my under over was quick and I was done, and I'd be looking for a J-Line's curl up, or if it was the other way around, a J-Line's rejection, I'd get bored and start looking at what everything else was doing, trying to find a trade, come back to VA or Tesla, and see I missed the move. So
Right.
if all I'm focusing on right now is ES and NQ, those are the only two charts I have up all the time, and I'm really feeling more and more confident, getting used to the way they move and the patterns they make, and it's grown my price action recognition by leaps and bounds.
Yeah, I've got the ES and crude, but I've also got beans, gold, and Q on my book map, just to keep.
Well, but you're way farther ahead than I am, so I that inspires me to hopefully get better.
I think ultimately it really narrows down to finding people that are new, and I went through this. I'm still new. I'm only 2 years into this, not even. But is finding what works for you and your personality, and then what you have available. Like, I started out with small caps. I wanted to be able to trade the way OTC took that trade that he showed. That's what I wanted. That's what excited me about stocks. And I went to the wrong chat group. I got washed, lost some money, and then came to Jay's room, and I came because he had. It was, he could teach futures, he could teach big caps, small caps. But my point is that I found that big caps work better for me, simply because in Canada, you can't find a broker that gives you borrows to short these small caps. So that led me into options, because I had a small account, and I had a small account because I wasn't consistent enough. So I traded with a small account. Well, that, trading options was detrimental to my mental capital too, because I was getting, not only was I trading poorly, I was getting smoked on spreads and everything we talked about, right? So nonetheless, I think
you don't have the pattern day trader rule in Canada like we have in the US.
No, so that's one of the good things. That's one of the good things. But the problem is, there's a rule in Ontario, in the province I live in. Like, what's that one that you guys, there's a lot of people in the room use, that's out, it's somewhere in the Caribbean. There's a broker.
Trade Zero?
Trade Zero. So Trade Zero, if you're Canadian in any province, you can use Trade Zero except for Ontario, because somehow Ontario has some sort of rule that protects its citizens from brokers taking legal action against them. Like, let's say I blow up my account and I go into the red and they need to collect. They have no means to collect. So they won't let Ontario residents, where I live, subscribe, which is kind of shitty. But, I figured it out, and that was part of the process. Okay, well, I need to learn to trade somewhere else. And that's where I found Jay, and it's been great. I've learned a lot, and I've learned a lot from my peers, you guys. I think a lot of the value has been here in these meetings, and the relationships that have been developed over the past few months for me as a mentor student. I've learned a shitload of shit. My trading's starting to come together now, and it's great. And I really appreciate everybody in these sessions.
Yeah, so one way to avoid this PDT, pattern day trade, is, like, you have to close all the margins and make it as cash only. So that if your account is cash only, then you can take the trades as much as within the limit of that amount for that particular day. So you are not restricted for PDP for cash only accounts.
So Remen, are you able to have, let's say, for example, a small account like a $3,000 account and trade futures as much as you want, as long as it's not a margin account?
No, I never tried with futures. See, I'm 100% on options trading, and the 90% of those options are with the SPY trades, and I do just scalp trading. So, yeah, so that is my trading style. So, I mean, after this discussion, I'm trying to start with the futures.
You're trying to start with futures?
Yes.
Cool.
Start with the micros.
Yeah,
You'll
definitely
learn
with the micros. Yeah.
You'll learn a lot. I mean, I trade micros all the time. If volatility is huge, like it has been the last several days, sometimes during Globex, I'll just put maybe 5 minis on, which is half of a full size. And it gives you, you could scale in, scale out, or you can widen your stops.
Yeah. See, another good thing now, though, what Leo just mentioned.
Sorry, Tom, go ahead.
What Leo just mentioned there was a really good point, Remen. If you're trading futures, like let's say you get to catch a move, I mentioned this earlier in the session. Let's say you catch a move and you want to leave your position on. Well, futures trade all night, man. They take an hour off. So if you want to cut that position or leave an order in, you're not going to get gapped through. The only time that would happen is when they do close. They close at 4:30, Leslie, futures, and then they open again at 6, or is it 5 and 6:30 they open?
Is it
It's an hour and a
4:15 or
half.
4? I think it's 4:15, isn't it? Or
Yeah.
No, it goes up to 5 and opens it up again at 6.
Okay, so yeah, there's an hour break, and you want to leave a position on. Let's say like it's not really happening now because we're not. It's actually funny. The past 2 weeks we've only gapped down once, and then we ended up popping back up. But in all this downtrend, you're not getting that many gaps down. But when we were uptrending, there was lots of gaps up. So if you got a good position earlier in the day and it ran, and you could leave, like let's say you took 4 contracts or 4 micros, and you made $300 on that on your move, and now you're just going to let one run with, and bringing up your stop, you can do that.
Okay. Okay.
You know what I mean? And you can manage it overnight, and you don't have to worry, or you can put like hard stops in. Leo, have you ever done this?
Yeah, I did it Tuesday night or Wednesday night when after the Fed, Globex opened up, it gapped up slightly, and then it faded all during the Asia session. I found a level. I put 3 micros on and ran that all the way up from, I think my entry was 42.60 somewhere, and it ran all the way up to 4,400. And I had probably 30-40 point stops, but that wouldn't have killed me on 3 contracts. But
Yeah.
That's $1,000 trade or more.
Yeah, that's great. No, that's great. And see that they're just they're liquid, man, and you can trade them. You can trade Sunday night if you want. And so, like for me, I get busy. I have a seasonal business, and summertime, I'll trade futures, and I'll trade them when I have time. I don't have to be at the desk at 9:30 a.m. or during market hours, right? I can trade them overnight. There's lots of they're more versatile, right?
The one thing you got to have to understand about futures during Globex is you have 2 sessions. You got your US session, which goes up until about, okay, so I'm going to give you Pacific Standard Times, but they go up until about 7 p.m. and then the Asian market opens. And so at that point, you kind of have to, before 7 p.m., you have to look at your financial news to make sure if you've got any announcements coming out in the Asian markets. And then the same thing for the Euro markets, because the Euro markets open at midnight on the Pacific time, and they'll run till 8 o'clock in the morning, the next morning. So that Asia can have an effect on what's going on in the market, and then Euro tends lately just completely turn it around and go the opposite way. And you can make some really good money by waking up at midnight and finding some trades. And I've done that in the last couple of days, and it works.
Yeah. Did you notice the past week, and we're kind of dragging on here, but Leo, did you notice the past week how London kind of bought up
Oh, they bought up everything Asia did. Yeah, Asia
Yeah.
brought it down. London brought it up.
Yeah, and then I think it was Friday that London finally sold it down, and we popped right up in our session. It was pretty comical.
Yeah, that's
And to
true.
continue on what Leo was saying too, if you trade futures, it's not just the overnight news what Asian stuff is doing, but you also got to be aware when FOMC is going to release news statements, things like that. That can create havoc when you're trading on futures also.
If any of you have ever looked at Bookmap, like the ES market Bookmap, about 20 minutes before FOMC announces, the heat map goes completely black.
Yeah.
All the algos go away.
And market makers disappear a few minutes before, and it just takes a little bit of trading to spike it way up, way down.
And don't take the first move after a Fed announcement.
Never.
You'll get trapped.
I had a my worst loss ever was just post FOMC. I think I lost like $3 grand one day. I mean, this was years ago when I was first learning, but and now I don't even think about touching Fed or even trading Fed up until the announcement, because it's so choppy, until the Globex opens again, because then they'll usually go the opposite way or they'll continue.
Yeah. Don't you notice Monday and Tuesday are very choppy as well? You got some moves, but there wasn't a lot of volume Monday, Tuesday in ES or NQ until after the Fed meeting on Wednesday. Then volume came in.
Well, like yesterday afternoon when the markets went absolutely nuts into the close, the volume, there were absolutely no sellers. It was all buyers and it was all algos and it was all very, very low volume. I mean, there was a volume taper as price moved up.
Yeah.
And you got to watch stuff like that. But it makes you a better small cap trader, I'll bet you. If you because you have so many opportunities to trade futures within the day or even at night.
I like it better. I'm glad I found it, and it's just really helped my trading of late. It's giving me a bit more confidence, which is huge. I can set hard stops; they get stopped right away. I don't get jumped. My order doesn't get jumped over.
Other than Jay, what would you say is, like, for someone who doesn't know futures, what's the best resource that you've learned how to trade from?
Well, y'all can I take this 1 second and see if y'all agree? Mark, are you trading small or large cap right now?
Small cap.
Small cap. I would start studying the large cap stuff, because for me, I don't care for trying an under or an over under on a future. So that's my personal opinion. I loved over and unders when I was trading large cap, but I don't care for them. But I would start trading large caps because there are a lot of same principles and setups with it. I don't know if Tom and Leo agree or not.
I don't know. I've learned from screen time, but the first exposure, the first education I got on futures was from a book I read called Mastering the Trade. It's written by John F. Carter, who's a pretty good trader.
I followed him for years.
He has some, I learned about internals through that book. And, at first it was tough because, you need screen time just like anything else. But now with more exposed screen time, I'm learning to use the internals to give me conviction in my trades. And, but I recommend for the amount, you could probably get that book online, Google book, I think probably for 20, 30 bucks, 40, maybe 50 tops. I forget what I paid for it. It was for the amount of education you'll get in that and how to trade the E-minis and the futures is great. I don't know if you agree or not, Leo, but.
No, I do, because I followed John for about, I don't know, 6 or 7 years. That's where I learned most of what I know now. But I kind of outgrew their room. And during that whole time, I also followed James Dalton for volume and TPO profile. That's where I learned all that. And I started with him.
Rare Pro learned a lot from him as well.
And then I would suggest maybe going to YouTube and looking at some of John Carter's and James Dalton's videos, because there's tons of them on there, and you'll learn just by looking at them for free. Yeah,
for sure. And you guys get tons of screen time if you can trade in the day and the night. Jeez.
Oh yeah. I've probably got 40,000 hours of screen time.
That's crazy. Like nothing beats screen time. Can you apply J setups to futures? Yeah, sure. But there's, you know,
Oh yeah,
they're,
totally.
they're great for that. But I mean, there's more to them that you're gonna have to take than just trading a stock, I think. You know, so the way Leo uses it, and Mirko is really good at it too, using market profile. Something I want to add to my arsenal, but you've got your internals that are great. You don't have them in the after hours in the Asian market and European market though, right? So that's where volume profile comes in, and market profile, right?
Yes. Well, the market profile runs 24/7, or well, I've got mine set up to run 24/7 with the hour break. So it creates new TPO profiles when the when the Globex session opens and when it closes a minute before the real-time markets open. And then it creates a new, once the opening bell starts, it creates a new TPO chart. So I'm able to look at what happened and all the levels that were created during the Globex, which helps me figure out, okay, are we long? Did we, were we long at the open? Were we short at the open? Are they going to take out the overnight high? Are they going to take out the overnight low? And those are predictive moves. I mean, you can almost tell what they're going to do.
Hey Leo, have you found any value in separating out the session, like the Asian, the London session?
Well, those two are combined on my TPO chart. I just find it easier, and then that way I don't have so much noise on my chart. It's just all combined into one. And it creates a nice profile. I mean, if you go back to the one that Eric, if you can, Eric can bring up my TPO chart, you'll see the Asian session. Almost. There you go. So the chart to the left of the elongated chart that you see, not that one, the next one over, that's all Globex, starting at 6 p.m. or 5 p.m. No, 3 p.m. my time until 5:30 in the morning the next morning. That was the P-shaped formation. So if you look at A period on the market open, you'll see they took it up, they took it down, but then in C period, they went for the overnight high and they took it out. And then they started building value above the overnight high. And then by the end of the day, they ended up taking up the profile to the left, the first profile that you see that is cut off. But I also think, no, they never got the overnight low, but that overnight low is pretty stretched out. But you can see, you know, wherever market opens, what they want to do.
I want to add one more thing for you guys, that if you're going to start trading micros, just trade 2 contracts to start, because there's an adjustment period to how wide you want your stops based on your setup, and the price moves fast, especially in the first couple hours. It can move really, really fast. So just be mindful of that. And because I fell into the trap when I first started trading futures before I got into the room, and I would be, hey, this is great, I had a couple wins, and then I would size up and get smoked. You know, like, you know, you go to 5 contracts or 6, and it's so easy to do.
Yeah.
Futures oriented trading platform, and a lot of them will give you free demos. Ninja Trader does have a really good demo. I use TradeoBait. I like the platform. They have a 14-day trial where you just go in and do simulated trade, and I think you can do replay also on it. So, you know, you can always go in and try one of those 3 demos first on a futures platform and see if you even like it.
I'm using Edge to Trade, which is Futures Trader 71. It's a brokerage that he started. Really good commissions and fees. And I'm using Rhythmic for my feed. And then it executes through DOS. But I'm using Motive Wave to make my executions because I like that platform better. And you can link to it. I also have Ninja Trader and TradeStation as well, which both execute trades pretty well.
I didn't like Ninja Trader. I almost went with it, but what got me was you cannot get, if you want to use their free platform license, great, but you cannot get VWAP, and you can't get couple, like, you can't do bracket orders
No.
unless you upgrade to either their, quarterly license or their lifetime. And I think, profile too, volume profile, you can't
Yeah.
get that upgraded as well. And that just, VWAP, you gotta get a lifetime license for, that really irked me.
Yeah, I had the multi-broker a lifetime, which I got years ago. It was cheap back then. It was $900 or something.
Yeah, but Ninja Trader is good once you've got it.
Well, it's good for charts. I like the charts.
Yeah,
Like you're looking at a Ninja Trader chart right there.
right, I agree.
And then I
just-
can
I just won't go into a future trade without a bracket order.
of course.
You know, I wasn't gonna do that. Like,
Yeah, no,
you know?
you have to. No, you have to, because you can get smoked in like 2 seconds.
Oh, easy.
And that happened to me the other day. I had like a 5-point, bracket order for my stop and a 10-point for my target, and then I can adjust it. But the second I put it on, bam, I got hit really hard.
Yeah. I was obsessed with Tesla, so I tend to lean toward and have my best win rates on NQ. Love it. Versus ES. But if you like slower moving stocks, then ES would probably be for you. If you like the fast ones, NQ. And I had somebody tell me, and I don't know because I don't watch the Russell much, RTY, but they say it's kind of a happy medium.
It is.
I can't. Is it okay?
Yeah.
Which is
Well,
basically
crude-
small caps, right?
Crude. Well, yeah, crude can be good, very good. Crude's almost predictable at times.
Really? I look forward
Yeah.
to learning that one. I'm still working on ES and NQ, and then crude will actually be my next one I conquer.
I lost too much on NQ. I just can't deal with the volatility there.
I
Just
love
too
it.
much for me.
I love it. I do. I'm obsessed.
I have one more question. So anybody using TD Ameritrade for the futures?
I'm sorry, I didn't hear your question.
Yeah, anybody using TD Ameritrade? I mean,
Yes.
dollars? Okay.
Yes, but the commissions are expensive. Like
And you got a lot more margin, correct?
they require full margin. You don't get on TradeStation it's 1/5, I believe, of full margin to trade during the day, but you have to exit your trades before the market closes on the same day. Otherwise, they're going to do a margin call on you.
Right.
Oh,
I do
okay.
want to
and
point
then
out
that-
though that margin on what we're talking about futures is a different margin than when you're trading small caps.
Right. But TD Ameritrade, they charge for 1 micro $2 commission plus I think a 20-cent fee.
Yeah,
That's
ouchie.
$2.20 on one micro. You got to make, you got to make like 5 points just to get a hit.
Yeah, on Trader
Which on
Bay,
other
it
brokers,
was
it's 50 cents,
120.
right?
Yeah, like Edge to Trade, I think it's like 20 or 30 cents.
But you've also got some other little fees in there, so I know with everything combined on Trader Bay, I was 122 per contract, $1.20 per contract, I believe, round trip.
Yeah,
on
that's
micros.
that's what it is for micros and ES at TradeStation.
Is it okay?
Yeah,
How much is the trade station?
about $1.20.
Okay.
And
What is
then
that?
the
There's-
mini contracts are usually just a little bit more than that.
Yeah,
I'll get back to you guys on the fees on IB. I have to look at them, but I don't think they're that much. For some
No,
reason.
IB's good. I just hated their charts. That's why I closed that account.
Like I'm using TradingView charts, but I can't stand their charts either. Looking at, I went to yesterday. I'll open it up because I've got my Trader Sync open right now. Just let me look it up. I'll see what my fees were yesterday. I made a lot of trades. I over traded yesterday, but I traded pretty good.
Oh, it's
Thank-
AMP.
thanks
Has
for
anyone
your
ever
time,
used
Phil.
AMP?
I
AMP,
did. That was the
AMP?
first brokerage I ever opened was AMP,
I
and
think
it's very
he
good.
uses it, I think.
Yeah,
Yes.
that's what I use. I
Their
like
fees
it.
are lower, aren't they?
They're equivalent to Edge to Trade and probably Trade of 8.
I thought Edge to Trade was Jay's stats platform.
Wait a minute. Wait a minute. I
I
tell you,
was
you're
actually
right.
wondering
You're
about
right. You're right.
myself, but I figured maybe there's 2 of them.
No,
Hey, guys.
no. I'm sorry. Okay, let me look it up again.
I took up 25 trades yesterday. I paid $42 in fees. in commissions and fees total. So that's pretty good. You know, so that's, you know, like 60 cents maybe a trade per contract. That's, you know, that's trades. That's not like executions, right? So I'd have to break it down if I had, yeah, somewhere around 60 cents, I would guess, but I'll confirm that. I'll look it up and then I'll post it in the general chat room just for you guys, that, so you know.
All right, everybody. I think this is a pretty good point.
Yeah.
What's wrong with you, Eric? You want to go have a life or something?
What's up?
What do you want to go have a life?
Yeah,
You want to
exactly.
leave us?
I know
Great session, guys.
You guys could stay here for hours.
We could.
I'm working on my stats for Jay.
I told you guys before. I remember you guys used to. I would leave because I'm like, all right, guys, you guys have fun with your deep discussion, and then I'd come back later, and they were like, yeah, we went 5 hours, and I'm like, oh my gosh, like we got to cut these things off. So that's really funny.
Real quick,
But-
anyone took the video of this?
I did.
want the video. You did? Cool. I'll ask Jim.
Yeah, you guys message each other if you can in private about the video. Listen, there's like 3 or 4 people that are actually gonna maybe go back and watch the video, but I've talked to certain people in the group, not trying to name anyone, but some people don't feel comfortable kind of speaking if they're being recorded. So kind of some people don't like to speak up because of that. So just, you know, when it comes to the video, just share it amongst yourself if you can, and do your best with that. You know, it's like some people just don't want to participate if they're on video. They don't want to, you know, they don't want to say something that, you know, doesn't
But
sound
they
smart.
said,
No, that's true. I get that.
Yeah, so I mean, it is what it is, you know, but yeah, just so you guys know. And yeah, so let's call it a day here. You know, you guys message amongst yourselves. It sounds like we're all going to be futures traders now. And
I'll post the trading platform or the broker that I'm using in the chat room.
yeah, perfect.
And
That's
with
it.
all
Special thanks to OTC and Trader John for sharing their trades with us.
Yeah, thanks guys. That was great. Okay, and if you guys enjoyed the session, you liked it, learned something, post into the general chat, you guys, letting everybody know, you know. So, okay.
All right. Thanks, guys.
Thanks,
All right,
guys.
have a
Have
good
a
rest
good
of the
weekend.
Eric,
weekend.
thank you.
Oh wait, there's another video webinar coming up in 2 hours. It's the psychological.
Oh, cool.
I think they posted the link for it, maybe.
All right. Well, we'll see you guys. Have a good rest of the weekend. Message me if you need me. We'll talk soon.
Bye bye.
Take care, everyone.